All right, guys. So Nvidia at 490 is only at $10 away from 500. Slight green day yesterday. AMD had a slight red day yesterday. Today we have CPI inflation data. We're gonna get a timer going. It's a big day, busy day. Generally we got about an hour and 51.5 minutes. Let's call it 51. Let me know if you can hear the music. You should be able to. But yeah, Nvidia up. Portfolio's green. Yesterday we had some green action. So, I'm awake. Oh man, didn't sleep the best. Again, CPI today, expectations are 0.3%. On the year, it's expected at 3.3%. All right, so we got the timer up. CPI is expected at 0.3% and 4.1% on the year. All right, so we'll put the expectations up right there. Let me catch up with the chat, drink some coffee. What's up, Raul, Mario, Teddy, Matt, Sam, Wesley, King, Game, Womble. Books will be cooked to do it 25 basis points in December to stop people spending for Xmas. Well, nobody's going to stop people from spending. I don't think so, at least. I disagree. I don't think so. I think we'll probably pause again in December. All right, so we got the poll going live as well. But yeah, I disagree. I think we're going to pause in December. Oh, man. Oh. watching my equities portfolio move. It's green today. Sorry, I'm drinking some coffee. Yeah, shopping's going to continue, especially this year. Yeah, I don't think this is going to be the big crash of the year or anything like that. We're completely 50-50 split on the poll, or at least 50% of people think we're going to come in high. 25-25 think we're going to come in low, and I don't know. So. We asked AI what Europeans believe Americans from every single state look like, and the results are hilariously mean. All right, I gotta find Louisiana here. Where's Louisiana at? Honestly, Alabama's not that, Alabama's pretty accurate. I'll say that, AI got it right. I'm just gonna say that, go Tigers. But yeah, actually, my family is actually from Alabama. Like my dad's side is from Alabama. So my uncle went to Auburn. My grandfather went to Bama. The school. So Alaskans, Wyoming. Everybody looks like Clint Eastwood. Texas. Texas is kind of accurate too, I'll say that. Utah. Utah, just a bunch of blonde babies. Vermont. I never really met anybody from Vermont. Virginia though, yeah. Sorry, y'all want to see what I'm seeing? Yeah, I'm looking. Is that Michael Burry in chat? Hey, yeah, right above you, bro. All right. Yeah, sorry. I don't have time to go through all of these to find your state, but if you want to list it, I'll try. I'm trying to find Louisiana. It's got to be bad. And so I'm from Louisiana originally. That's my hometown, is Baton Rouge, Louisiana. Go Tigers. But I haven't seen it yet. I've seen Montana, Nebraska, Nevada. Nevada's pretty accurate. A bunch of old people at slot machines. I mean, that's pretty accurate. Oregon hipsters, basically. Pennsylvania, baby eating chocolate. Rhode Island looks like Jordan Belfort. South Carolina's got a football. Old man with a football jersey on. Tennessee is like a... Tennessee is like a bootlegger. I guess it's kind of accurate. Kentucky is like an old man in overalls. There's Louisiana. Louisiana's pretty accurate, you know. Tell me that's not me right there. You know what I mean? I mean, crawfish doesn't look anything like that. I mean, I don't know what kind of animal that is, and I'm probably not going to eat it. But aside from that, it's pretty accurate. All right, guys, CPI today. Do you think it's going to come in high or low? Let me know. I don't know. Those are the largest crawfish I've ever seen. You know, I know other people call them like crayfish. Some people call them crawdads. That's kind of like a slang term where we're just kind of joking around. Like, yeah, you gotta go get some crawdads. You know, it's just it's kind of like it's kind of just slang. But most of the time we call them crawfish. We're like, hey, we're gonna go get some crawfish. But it's pretty accurate. But again, big crash ahead, pal face. Yeah, maybe. I don't know. I think we're up a lot. I think if we're gonna crash, we got room for it. All right, so Wall Street investors selling house outside of Dallas. The estimate has tanked by 28% from its peak in mid-2022. The current list price is almost back to where it was before the pandemic. Good, bro. Honestly, real estate needs that, dude. And again, that means that like we're gonna lose money in this house, but like I'm okay with that. I'd rather real estate prices go back to normal. You know, I'd rather prices go down. Home Depot posted earnings this morning. I didn't mention them. I think they were this morning. Or was it yesterday? I don't freaking know. Okay, so Home Depot did post this morning. Came in at $3.81 a share. Looking at Home Depot here. They beat EPS. Looks like they beat Rev as well. C Limited also dropped. We also had some other stuff, but nothing really big. You know, the next big one, Bowflex is a publicly traded company. Who knew? Target on Wednesday, tomorrow morning, we got Target, JD.com, Advanced Auto Parts, TJ Maxx, Xpeng, a couple other big ones. Cisco tomorrow evening. Alibaba Thursday morning, Walmart Thursday morning, Macy's Thursday morning, Gap Thursday evening, Dolby. And that's basically it for today, or for this week. Next week, earnings wise, adjusted for inflation, prices are normal now. Well, it depends on what you mean. CPI, gotta send this to the moon. Maybe. Where's Tesla at right now? What did Tesla end up doing yesterday? Oh, Tesla. Wow, dude. Tesla is up. I'm glad I never sold, dude. Tesla's so freaking volatile, though, man. Like a normal fluctuation in price, this thing moves like 10% on a normal fluctuation of price. Like from today, from where we are right now in Tesla back to where we were on the 10th, right? So 4 days ago, it's moved 10% since then. 10 freaking percent, man. Like, and this is normal. Honestly, I was very, very close to cutting my Tesla trade. You know, I was very close to cutting it because honestly, when it dropped back down to 200, I was pretty skeptical, and I like Tesla. Like, I do like sitting in it, but I was like, no, I'm going to wait. You know, the Cybertruck comes out on the 30th of this month. I'm just going to hold this thing, you know, and I'm glad I did because it's right back up to where it was, back up to 228. Nvidia all the way up at 490. All right. All right, so Tesla shares are exactly the same price they were 3 years ago in December of 2020. Since then, revenue went from 31 bill to 100 bill. Profit went from 782 mil to 11 billion. EPS went from 24 cents to $3.14. Yet the stock is still down. All right, so the average credit card balance as of yesterday hit a 10-year high over $6,000, up 15% from last year. All right, guys. All right, so looking at our poll numbers here, 44% think we're going to come in lower. You can see the poll changing, 42%, 41%. 39% think we're going to come in higher than the 0.3% expectation. Again, core CPI is expected at 0.3% as well. On the year, we're expected at 3%. On the year for core CPI, we're expected at 3.3%. Core is expected to come in the same as it was last time. So core is expected to stay flat. Core CPI, that is, expected to stay flat relative to last time. And so core is not really expected to make any big moves here. If we look at the SPY, all right, guys. So we're still moving up a little bit. Again, Tesla. Again, if we look at Tesla all the way back up to 228. All right, team. Bear with me one second. All right, team. All right, so let me put the NASDAQ up here a little bit. Here's the NASDAQ. Again, the NASDAQ looks a little bit stronger than the SPY, which means that like tech is probably leading the market some. So CPI comes out at 8:30 Eastern Standard Time. Actually, let me update the All right. So again, we're gonna put that up so you guys can see 8:30. There's also a timer in the top left. All right, team. Again, we're at 441s. Q is at 378. Tesla's still ripping up at 227s right now, 227s. Checking back on my chat. Since the rate of inflation impacts monetary policy decision and this interest rate set by central banks, in short, a higher CPI indicates higher inflation, while a falling CPI indicates lower. Yeah, I mean, okay, so CPI is consumer price index. It's how high inflation gets. The way the Fed works is that the Fed's only major way to combat inflation. There's a lot of ways they do it, but the major way the Fed combats inflation is by raising the federal funds rate. When the Fed raises the federal funds rate, what it does is it makes banks have worse margins. It makes banks more expensive. And banks' logic is to raise interest rates to consumers when the federal funds rate goes up, right? And so in that regard, what it does is it stops consumers from spending as much because interest rates are higher. And in that regard, that eventually trickles into businesses lowering prices to compensate for those things. That is what it is, right? And so when inflation is really bad, the Fed raises rates more aggressively. If inflation is not super bad, the Fed might pause like they've been doing. They might skip. They might cut rates if we're in a really good spot. And all of those things have a short-term effect on the market in both good or bad ways. A lot of the time, if we go outside of expectations, like a lot of people are thinking that we're going to raise rates in December, but if you look at the actual stats behind a potential rate hike, it's very unlikely. Every single rate hike decision, we get a lot of contrarians saying, oh, well, we're going to go against what's expected, and it never ends up happening. Like you can see right now, 86% of people are expecting a pause or a skip, 14%, and that's a larger percentage. 14% is a larger percentage than we've had in some of the previous ones, but we are kind of far away. We still got like a month until this rate hike decision. And so, yeah, I mean, almost 90% of people expecting a pause again. I am as well, but today's CPI inflation report is going to impact what the Fed does in December for their rate hike decision on the 13th. And so that's what you want to pay attention to. And that's why it's important to watch all this stuff and pay attention. What's your prediction for CPI? I really have no idea what CPI is going to do. Nobody really does. We can, unless we're talking about insiders and companies. Insiders might have some idea, but All right, guys. All right, guys. Q at 378. $24 left. No, we got an hour and 20 minutes left until CPI comes out. We still got a lot of time here. Here, Pawn. Let me. I forgot to get Discord up, brother. Hold on. There we go. I hope you guys are ready, man. I'm ready. All right, guys. Again, today we got CPI. Tomorrow we got PPI retail sales. Thursday we got jobless claims, Philly Fed Index, industrial production capacity utilization. We got Fed president and the home builder confidence at 10 on Thursday. Friday we got housing starts, Fed president Goolsbee and Mark Daly speaking at 10. CPI time and Indian time. Give me 1 second, bro. Hold on. It's going to be at 8 p.m. Tuesday. It's going to be at 8 p.m. 8 p.m. Indian Standard Time. I think that's, 8 p.m. Indian Standard Time. Hit the like button for me real quick then, because you're welcome, sir. You could have used Google, my friend. 1 ounce gold coin is nice. You can hold it in your hand. Yeah, that's cool. If CPI is lower, will this be bullish for crypto? Probably. Will CPI data make gold move? Maybe. Most repos are for 20-something young men, if I'm not mistaken. Yeah, I feel that. That's probably accurate. Again, when I was really young, I wanted a really cool car because every young kid wants a really cool car. As you get older and you're more able to actually afford really cool cars, you know, when you're my age, usually it's kind of like hustle mode, I think, for most people, where they're my age, they pinch pennies, they don't really spend a lot. And then when you start to hit like mid 40s, you kind of go through the midlife thing. And, you know, that's when you start to buy those really cool cars because you're like, well, F it, you know, like I'm getting old. I want to look cool. And so I think that's the psychology of it, in my opinion. But maybe I'm wrong. Where's AMC at right now? AMC under 8. So this is a pre-split price of 79 cents. All right, so again, we're starting to bounce up. Who? Oh, what kind of car did you get? I don't really feel like telling people. You could guess, you know. Again, I'll give you a few hints. It is a twin turbo V8. You know, that's all I'll give you. And it's a car. Nvidia at 490s. Are the new Vets twin turbo? No. Oh yeah, some of them will. But no, it's not the new Vet. The new Vet's dope. I wish it was the new Vet, to be honest, but it's not. It's still cool. It's a cool car. It's not that cool, you know. All right. CPI, yeah, the Tesla calls. Yeah, the problem with most Jeeps is that they'll flip really easily. Tesla for that affiliate marketing money. Nah, dude. It's not a Tesla. I kind of wish it was. I mean, again, if you think a Tesla is a V8 twin turbo, you know, you don't know. anything about cars. Teslas are electric. They're not going to have turbos in them. They're not even going to have any cylinders whatsoever. So certainly not a V8. You know what I mean? So yeah. All right, guys. Let's see what we got. Nvidia still trying to move up again. Nvidia right at 490s. The question with Nvidia today is it going to break 500? That's the real question. I bought a call on Tesla last week strictly because the entire stock market was going crazy and Tesla seemed to be tiptoeing. Yeah, I mean, underperforming stocks can be good buys, but it just depends. Yeah, I mean, again, I'm just not gonna tell you guys. Some of y'all might have got it right, but some of y'all might not have. I'll tell you this: it hasn't been listed a bunch of times, and it's not an Audi. But again, it doesn't matter. Anyway, CPI, guys, today is the story today. We still got over an hour before CPI comes out. We got about 400 people here. I shouldn't have even mentioned it. I was just excited. All right, guys. Yeah. This guy says, if anyone tells you that the amount of money you make doesn't matter, ask them how much cash they have in their bank account. Life becomes infinitely easier when you don't have to worry about keeping the electricity on or buying groceries. 100%. I mean, I don't know if money certainly buys happiness, and to a certain extent, because with more money you become less stressed, is what it is, right? More money equals less stress. Generally, sometimes it really is a situation in which you have more money, more problems, but make the market move. Money can't buy happiness. You just don't know where to buy. You don't want to be mega wealthy. In today's standard, it's over 15 million. I mean, yeah, I do. I'd like to be mega wealthy, of course. I don't think you really need, it depends, right? I'll tell you this, I think from the outside looking in, it looks like all the money you would ever need, but to really afford the things that you want, people have to understand how expensive it is to live in nice things, right? Like in Texas, you buy $1 million house, right? You're paying $15,000-$20,000 a year just in the property taxes alone. Just in taxes, you're spending 15-20. Not even including, if you're in a 6,000 square foot house, it's going to cost you a mortgage payment essentially and utilities every month just to keep up with that house, right? And so I think the biggest mistake most people make is that they buy a house that's too big for them, for their budget. And that ends up stressing them out more, but as long as like you can kind of stay a big fish in a small pond, so to speak, when you do earn money. So instead of like living lavishly, you instead live very small, and you're able to stack your money more and not stress so much about stuff like that. Then I think that's when money provides happiness. Like if you make more money and you just end up leveling up to another house that's larger and more expensive, you're going to cancel out any happiness you're going to get from it, because you're still going to be incredibly stressed from everything. And I think that's the way you have to look at it. Yeah, we'll trade CPI. We'll at least watch it. Bitcoin retracing back. Where's Bitcoin at right now? Bitcoin all the way down under 37,000. Again, the problem that I'm seeing right now, and I have to be honest regarding Bitcoin, is that there's a lot of rumors floating around about the freaking there's a lot of rumors floating around about the Grayscale ETF getting approved, about some of the Bitcoin spot ETFs getting approved. And I think the problem here, the vulnerable spot that Bitcoin is in, guys, is that number one, while BlackRock, while Grayscale, while Bloomberg, while all these companies think there's a great chance of their ETF getting approved, the vulnerable spot for Bitcoin specifically right now is that if it does not get approved, if this ETF does not get approved, especially like specifically by January 10th, Bitcoin is going to dip massively, right? Because one of the reasons we're up to almost 40K right now, or we have been, is because people are front loading on the potential approval of that Bitcoin spot ETF. And so if for whatever reason the SEC doesn't play ball here, that's going to cause Bitcoin to drop drastically. And that's something in which you want to understand is a potential outcome of this. It's not just an automatic approval. I hope it is. And if it does get approved, that should spark, like, I would say, the next bull run in crypto, the next hype in crypto. If it does not get approved, that is going to be catastrophic for price. And I think that's a very self-evident thing. And I think that makes Bitcoin currently, as well as the other big boy cryptos, in a very vulnerable position, in which if that doesn't happen over the next month or two, that's going to be problems. People are going to lose money. They're going to sell. They're going to get emotional. Stuff's going to happen. And so I think in that regard, the Bitcoin ETF has to get approved. If it doesn't, it's going to be really, really bad. I'm on Long Island. Property taxes over 30 a year. On how much of a house, though, Billy? Yeah, stress does. Oh yeah, in Texas for $1 million, you get like a little mini mansion. 6,000 square feet. You try to buy the same house in Cali or New York or Rhode Island, you're gonna get like a. It's not going to be like a bad house, but it's not going to be like a mansion. It's going to be a regular house. But yeah, I think with crypto, guys, y'all just need to be aware of that potential outcome. Y'all need to understand that could be what goes down. All right, so we're seeing some people say the next. So this guy Scott Allen Cole said, "I appraise commercial real estate. I have no work for November. This is my worst month since March of 2009 and worst year overall since 2016. Saw it coming, prepped, and I've been hunkering down. Fortunate to now have a wife with government job. 2009, I was paying alimony. Lol. People are saying the next 12 months, this guy quantitative easing infinity, QE infinity, which is money printing basically. The next 12 months or so are probably going to be some of the craziest times we have seen. I truly hope people have set a little cash aside. Tough times are coming. This is not doomer talk. It's just being practical. Hedge your bets. It's common sense. Yeah, but again, the problem is that we heard this a year ago. And I don't even disagree. I think the bigger risks here, like the risks that we're seeing right now, guys, is this, okay? Rate hikes are a lagging thing. So for a rate hike to take effect, right? So like the FOMC meetings, for those decisions to take effect, it takes about a year, at minimum, for us to see any kind of improvement from those rate hikes, as well as, but again, you got to understand the banks are those, remember, raising the federal funds rates hurts banking. Right. And so banks are the most negatively affected by these rate hikes short term when they start to take effect. And again, a year ago, we were raising rates pretty aggressively. Let me see if I can find a rate hike graph. And so as we start to move into 2024, the question is, are the rate hikes that we've done over the last year or two going to hurt banks more? And what does that look like? That is the question. All right, so here is, you can kind of see, here is the federal funds rate, just to show you what I mean by that. Yeah, so again, in October of last year, a year ago, raised rates, paused a little bit, raised rates, paused. Let me see if I can find the actual one. That's not the actual one. Let me see. Okay, so yeah. Again, so here's April of 2022, rate hike. So these are 50 basis points. This is 25. The small ones are 25. The bigger ones like this are 50, 25, 25. Pause, like we've been in. So again, you can kind of see we've been pausing lately, but this is a lot of rate hikes that are still gonna show their face over the next 6 months or so, 8 months. And we'll watch banks, but I think that's one of the risks. I also think, though, the problem, we talked about this before, and I'm going to say it again. Like, the problem is that bear markets that last longer than a year, okay? So, like, bear markets that last over a year, or that bear markets that last for more than 1 year, are incredibly rare. We have had 3 instances of that, I think, since like the 1950s, or maybe no, 3. I'm sorry. It's actually, we've had 3 instances of that, I think, since the 1920s. Okay, one of them was the 1929 market crash, the biggest crash in history. The other one was the dot-com boom and bust. And then I can't remember what the other one is. I'll have to look. But none of them have lasted very long at all. And it's one of those things where I always tell people, like, we've been down over the last few years. Again, this is one of the reasons. Again, and it's really confidence building, because it means that I was correct, right? Like, a lot of people argued with me about why we were going to crash right here. And again, I didn't realize it, but my argument was sound in that regard, because what it means, like, if you guys remember what my argument was, if you've been watching my stream, and again, you be honest, if you've been watching my stream, one of my big arguments was, we're not going to go down forever, right? And then when you look at that data point that I just talked about prior to this, again, very, very rarely does the market go down for multiple years in a row. Okay, very, very rarely. And again, that was my logic here, is that the market's not going to go down forever. And so what you saw was a bearish year right here. And again, that logic remained true, which is like, we had a bearish year. The next year we ended up pushing up. And so, and that was recent. This is very recent, guys. We had a bear market recently. We had, we're not close to highs. We haven't been close to highs since 2021. You know, but again, so I guess my point is that a crash is not just a given, and you do not want to have that mindset. Those are the people who I see who are the most wrong in markets, and a lot of the time it's the big YouTubers telling everybody the market's going to crash. The market's going to crash. They're the most wrong. They tell everybody the market's going to crash because it gets clicks, and then they have to explain themselves out of it later on. But at the same time, right now, while that's rare, at the same time, the rate hike effect that I just mentioned, as well as the cascading effect of commercial real estate, is a vulnerability for the market. I think that's a very obvious thing. Real estate's struggling. Interest rates are super freaking high. Nobody wants to buy a home. Nobody definitely wants to buy commercial real estate right now, at least especially get a loan out on it. The whole market is kind of iffy, and people are sketched out. And again, that's with the rate hikes that haven't really seen full effect over the last few years. So we'll see what happens with CPI today. CPI is the consumer price index. Again, we do have Tesla moving up a little bit. It's at 228s. Yeah, what's up, Don? What's up, Daniel? What's the mid 200s accounting for paying the interest over full term? Yeah. CPI will do both. I think tightening cycle is going to have the same effect as the transitory easy money cycle. We waited too long. Maybe. What's all this mean for us in our pockets? Well, rate hikes help inflation, so we might see better inflation prices, but we also might see weakness in banks, and that might trickle into other stuff too. Core inflation is projected to stay the same. So excluding food and energy prices, that number is expected to stay the same when you take into account food and energy. All right, guys. All right, so we got about 600 people here already. Still got an hour, you guys. Still got an hour. What had the biggest move last month? CPI does. Is it a good idea to have a light position under CPI? I don't know. I'm not going to. I would be very careful. Markets will pick up. Maybe. Typically election years are bullish because, but who knows? All right, dude. Is MMA? When did MMA gain this big meme-like following, bro? Again, MMA is a poster child of like why you shouldn't get wrapped up in penny stock marketing. Because, bro, these companies will sell you a dream and then keep on pushing it back. You know, the easiest way to put it is that meme stocks catfish traders. They're basically catfishing them. They're promising them riches, and then when they see the actual thing, they're like, eh. If it comes in lower, which side will currencies move? It depends on what currencies, brother. I mean, equities are going to move up if it comes in lower, most likely. All right, guys. Nvidia again at 490. The real question is whether Nvidia will break 500 today. We'll see. Nicholas Darvis famously said, "As for good stocks and bad stocks, there were no such things. There were only stocks increasing in price and decreasing in price." 100%. All right, guys, we got 600 people here right now. Again, hit that like button, guys. Bump the like button, hit the subscribe button. We still got 50 minutes left, basically, until this report drops. 50 minutes. This report releases at 8:30 Eastern time, 8:30. So... tech relative to small caps just at the highest level ever. This Bloomberg analyst says the SEC could approve all of them at once. Oh yeah, is it mustache November? I've never actually had a mustache. I think I can get away with it personally, like a handlebar. You know, I could even like point it up. Thanks for giving us this channel, best channel facts. Hey, thanks so much. Home Depot earnings. Yeah, Home Depot earnings came out already. CPI comes out at 8:30, team, 8:30 Eastern. Be ready, guys. Again, we still got about an hour left. And so again, slap that subscribe button, hit the notification bell. Thanks so much, team. Let's keep the growth. Kevin O'Leary joined the Benzinga deal. That's cool. All right, guys. All right, so Morgan Stanley's Mike Wilson came out with his new 2024 outlook, and he doesn't see it moving at all in 2024. Maybe he thinks the rate hikes are going to affect us like that. I'm not sure. Dogs are great, man. Rosie's just a good dog, dude. Like, way smarter than Bruce. All right, guys, we got almost 700 people here. Who's up to? I think interest rates will start falling in January. Continue to do so at least in November. Maybe. Consumer price index, it tells you an average cost of living. Yeah, it's inflation data is what it is. It's CPI inflation data. It's how much consumer prices are. Can someone tell me about today's market, gap up or gap down? Nobody knows. We'll see. Yeah, inflation data comes out in 1 hour. What do you expect in today's market, bullish or bearish? I'm really not sure. We got about 900 votes. 45% think we're going to come in higher. Let's do a poll. I forgot to do a poll. Get high or low? All right, team. Again, US CPI coming out very soon. Inflation data. Again, higher or lower? Let me know what you guys think. Again, hit the like button. Let's get over 200 likes here. We still got 45 minutes left. 45 minutes. I'm a little late, but that's all right. Somebody said my headline. Fisker dropped earnings yesterday. All right, so Nasdaq's AI push is really what's dragging Nvidia right at 490, right at the 200 EMA. Nothing is real, truly the evolution of mankind. As the two biggest investors are going to bet. What's up, beginner trading? It's me, Tech Guru. Hey, what's up, Tech? All good, dude. I like these candles. I'm not going to switch them. Sorry. Dazzle. 3.4%, maybe. What do you think we come in year over year, guys? Everybody listed in chat right now. What do you think we come in year over year? Expectations, just to put it into perspective, core CPI expected at 3.3%. Well, but what I'm asking is for regular CPI year over year, what do you guys think? All right, so expectations are for 3%. Last time it was like 3.7, I believe, and so we're expected to drop about 0.7 down to 3. Thank you so much, Ramsey. I appreciate the donation, brother. Thanks so much, man. Again, what's your percentage listed in chat right now? I'm still new to the market. If it's higher, what's the impact? The impact is the market's going to go down. Higher CPI means higher inflation. It causes more pessimism in markets. It means higher prices, higher inflation. That causes fear. That makes the market drop. Lower CPI means lower prices, more optimism, overall, and will probably make the market go up. But again, it's never a for sure given thing. That's just kind of the base blueprint of how it normally reacts. But again, it varies all the time. On Twitter, can I block specific bots? Like, dude, these people like spam, like no matter what you post. We already got a bunch of votes. So 60.7% of people on Twitter think we're going to come in lower than expected. 39.3% think we're going to come in high. I don't know. Hey, thanks so much, Ramsey, for the dono, bro. In a perfect world, higher CPI equals market goes down, but it's the stock market. It isn't perfect. Yeah, for sure. If it was that easy, everybody would just sit around and wait for CPI to come in low and buy it and high short it and whatever. But it's just not that easy. A lot of times I get a fake out before the real move. Yeah, for sure. No one knows if it's going to go up or down this time. What I do know is this time it's going to do both. So I'm telling you, there is not just one direction. This time it's going to do both according to analysts. Yeah, but analysts are historically not very accurate. Higher CPI equals higher inflation equals stock prices drop. Yes, most of the time, but it's not always. It's never that predictable, I guess, is the easiest point. Like, we still have people that try to predict it, but yeah, it's never that perfect. What did he? Yeah, I don't know. All right, guys. 37 minutes here. Tesla at 228 right now. Tesla at 228. Again, bump that like button up. And all good, Finch. Yeah. CPI around 3.5%. Core CPI predicted at 4.1. No, core is expected at 3.3%. I'm pretty sure. No, this is consumer prices. Wait, is high CPI good for the market? No. I wonder what the earliest I can get my blue belt in jiu-jitsu. So I talked to my actual like black belt coach yesterday. He gave me a ride home because I had to Uber to. I had to leave the car with Carol because our car's at the shop. And so we were having to. I had to Uber to jiu-jitsu and he gave me a ride home. But I talked to him, and he gave me some motivating stuff. Another purple belt was like, I rolled with him yesterday, and he still tapped me once, but he was only able to tap me once in 6 minutes, which I was like super pumped about. I was like really excited because usually he taps me like 5 times, but like I'm getting better. Like he put me in half guard, I put him in lockdown. Like the other day I had threatened him with an ankle lock and then use that to roll over on top and get him in crossface. And so like I'm getting better. And he said that. He was like, hey, bro, when we're rolling, you're getting much better, dude. He was like, I used to be able to just do whatever I wanted. And now there's threats. There's threats. I can't just do whatever I want. And then even my black belt coach told me yesterday on the ride home that like I was getting good quickly, And so, hey, maybe I'll have my blue belt in less than a year. I talked to the coach. He said, because he's the one that gave me my stripe when I got it. He said that he got his blue belt in 11 months. And so I'm hoping I'm going to get it in a year. We'll see. Sorry. I know I'm talking about jiu-jitsu. Y'all probably don't want to hear it, and that's okay. But I'm excited. As per your opinion, what will happen? CPI rise or low? I really don't know. Got any hopes for Tesla? I think if Tesla can just hold short term, that's good. Again, it's going to move with CPI, though. Are you sure he wasn't going light? No, this one purple belt. Hey, what's up, Bruce? This one purple belt doesn't really go light with me anymore because when so what happened was, so I used to roll with him when I was like pretty new. Like I had been doing it for a month. Now, granted, like I've watched MMA for years, and I'm not trying to say that like watching MMA and UFC has helped my jiu-jitsu, but what it does do is it teaches me the sequences behind things. And so prior to ever training jiu-jitsu, I knew the sequences behind a lot of the stuff. Like I knew if I have somebody in a body, or if I have somebody's back and they start to roll, or they start to unhook my leg to get me out of back mount, that I should roll over into front mount and like do a lot. And that it's not that easy. I know that might not be perfect, but I'm trying to explain, like I knew what all the submissions were before I learned them, right? And so I think that helps me progress faster than like somebody who's never done it before ever. Anyways, I'm getting off topic. The one purple belt that I was referencing, when I rolled with him in the first like month of my trading, he went light on me, as he probably should have, but I caught a guillotine on him one day, right, when we were doing it. So like we were rolling and I locked up a guillotine and I tapped him, and I tapped him like the second time I ever rolled with him. And so I think after that he stopped going easy on me. Like he stopped going light on me because I caught him, and again, it was all fun. Like after that, every time I rolled with him after that, I got destroyed. Like he was going light. I don't have any delusions of thinking that like thinking that I actually caught him without him going light on me. You know what I mean? But yeah. Will Michael Imperioli be presenting you the belt? Someone outside the U.S., what's the first step to investing or trading stocks? Save up money. Usually you have to make evaluations, but I would say start with demo. Yeah, I would say paper trade first. Learn how to trade. Learn the ins and outs of trading first. And then once you do that, then you can kind of like figure out what you want to do. There's a lot of different niches of trading, like options, futures, stocks. Paper trade first. Figure it out. Learn how to buy and sell stocks. Learn what it is. Learn the movements behind it. I'm not really chasing the belt. Like I would love to get my blue belt early, but I know I know from rolling with other people that it's not about the belt at all, right? Like there's some, and I'm definitely not like the best white belt at my gym. I'm not trying to say I am. I'm just bragging a little bit because it was really motivating for them to tell me that, and maybe they were just being nice. That's certainly possible. What I will say is that I'm pretty competitive with all the other white belts at the gym. Like it's usually a tough fight for them. You know what I mean? Like the last time there's only one other white belt that I can think of that really has my number. Everybody else, I'll win versus I'm trying not to brag, but this is just the reality of it. And so, but there's a couple that give me trouble for sure. So I'm not trying to claim to be like the best. I'm just happy I'm showing progress is all it is. Anyways, Tesla up to almost 228s. Put your kids in karate. I mean, karate's cool. I'm not a big believer in karate. I know like Lyoto Machida and Stephen Wonderboy Thompson, and like they use karate effectively. I think even Yuri Prokaska uses karate too. But it can be effective. Muay Thai and stuff like that are going to be a little bit better. Muay Thai and Jiu-jitsu is a better combo. Wrestling's probably the best combo out of all of them. But anyways, CPI coming out in less than 30 minutes. You can see Tesla popping over the volume weighted average price. The SPY is still slightly green on the day after having a really good day yesterday. The Q up to 378. So Q up to almost the volume weighted average price, still moving up a little bit, mostly from Tesla, I'm sure. Nvidia is the other story of the day. Nvidia sitting right around 490. And again, the question regarding Nvidia today, if CPI comes in favorably, will Nvidia break 500 today? It's very close. That would basically be a complete 180 relative to where it's been over the last few months, with Nvidia dipping down drastically. And so I hope so. I hope Nvidia bounces back. Nvidia is really what's propping up this market. St. Pierre had a really good jab, so he had really good like boxing, and he had his kicks were karate too for sure. St. Pierre was really good at wrestling though. He didn't really knock people out with his kicks or punches. He mostly would wrestle them to the ground and submit them with jiu-jitsu. You know what I mean? St. Pierre was trained by John Danaher, who's like this big jiu-jitsu guy. He's kind of like the father of modern sport jiu-jitsu. Not the father of it, I say, but like he's one of the people who everybody looks at right now to be like one of the best coaches in the world. He's not the father of it. Let me rephrase that. Probably bad wording. Do you think higher or lower CPI? I really don't know. I agree with paper trade. I turned 150 to 700 in a day. Also challenge yourself to be consistent. Yeah, just paper trade. It's really important that you paper trade first. Okay, because like I know how it is. I remember how it felt when I first started learning trading. Right, I really do. Like I remember how it felt. I remember what it felt like. I remember how good it felt to get ready to trade throughout the day. Right, I remember the butterflies that I had in my stomach when I first learned to trade. And I remember when you're first learning, it's like an addiction. And I remember that for sure. You have to be passionate about it, but you get really excited in the beginning because you have all this potential of making money, right? And then when you actually start to trade, a lot of the time you get brought back down to earth a little bit. But again, if you're first starting trading, the first thing you should do is paper trade. You could use a funded account program like Top Step. I'm not trying to do a sponsored plug or anything like that, but like, but you could use a funded account program like Top Step because again, Top Step's base combine right now is $49. And again, in that regard, it's just a much cheaper way to learn instead of putting up the money yourself. I just lost thousands of dollars when I first got started. Like I put up money. I used a platform called SureTrader, which is no longer even allowed or around anymore. And I lost thousands of dollars when I first got started trading. Thousands, in my first few weeks. Because again, I blame the marketing that's out there for trading in the very beginning. Like everybody acts like you're going to get rich. All you got to do is just, copy the simple strategy and you're going to get rich, millionaire students, like all this nonsense. So you think you're just going to get rich in trading, right? Most of the time you lose money. And I lost thousands in the beginning. I wish I would have had something like a funded account program. And these funded account programs, what I mean by that is like they give you a demo, test your skill. If you're good enough to pass with a demo, pass their testing, then they fund you a larger amount. Like Top Step, the base one's $50K. If you pass that test, you got to make $3,000 in profit on the demo without losing $2,000. So a 2-to-3 ratio, pretty reasonable. If you can do that while following their rules, they fund you $50K with a 90% split. They pay out millions, fund thousands a year. I guess I am going to do a plug because I'm here. They're a sponsor of mine, so I'm biased. But if you want to check them out, here's the link. I really do think they're a great way for traders to learn how to trade without taking on too much risk. If you lose on Top Step, you're out $49. It's not the end of the world. Relative to putting up thousands yourself, in that regard, it makes sense, right? I mean, it makes sense for traders to try. And to be fair, I think most new traders are going to lose this challenge. But it's a lot cheaper to lose this than put up thousands yourself and risk that, and so I think in that regard, it makes sense. Yeah, so you're right. Exactly, Yair. Yair says, I'm close to 1K down on Top Step alone, but it's still nothing as to what I lost. Yeah, I mean, imagine if you would have traded real money, you'd be down 1,000. Instead you're down, $49 on the combine or whatever it is. Not even there yet. You have the chance to come back and, so I think new traders specifically need to stop trying to get rich and start wanting to just learn the basics first. Condition yourself through repetition. Do the right things over and over again, and then move on to real money with that conditioning effect, and you'll do better. Yeah. Yeah. I'm a 23-year 5th degree Taekwondo black belt. My instructor once said there are many paths up the mountain, but the view from the top is all the same. Pick a discipline and stick with it. Yeah, for sure. 100% G. What I will say, though, is that the reason people look at jiu-jitsu as the king of martial arts in that regard, right, is that, and I saw it with like my daughter, in karate, you're leveled up and promoted very, very, very quickly. Like very, very quickly in karate, you're promoted. You get new belts almost monthly. And so, you know what I mean? You can get your black belt in karate in a few years, at some schools. In jiu-jitsu, you don't get a new belt at minimum of a year. It takes a year just to get your blue belt. Most of the time, it takes a few years to get a black belt in jiu-jitsu. It's going to take a decade or more. It's not something that it takes a long time, much longer than other conventional martial arts. What chart are you trading today? I don't know. I'm probably gonna be watching the NASDAQ and the S&P at the open. So probably the NASDAQ and the S&P. If you can't manage $100 of your own money, how do you think you can manage $100K of someone else's? Make no sense. Well, because it's not about how much money you're managing. They're going to have pitfalls that protect them in those situations, of course. I mean, that's an obvious, self-evident thing. They're going to have protections. The difference is that, when you're only risking what you spend on the combine, right? And so you get to learn how to trade under pressure with less risk. And that's like a really good, like smart thing to do, is learn how to trade. Love you. Have a good day. And yeah, that's like the wise thing to do, is to just trade small in the beginning when you're learning how to do it. And then once you learn how to do it and learn how to manage those emotions, that pressure, that's when, you can switch up and, do whatever you want to do. The benefit of funded account programs is that they teach you how to trade under pressure. And that's something that's very difficult to do. A lot of people try to go from just pure paper to live money, and they try to trade the same size. What you learn very quickly in that is that when you try to trade larger size, you're going to cut losses way too late. You're going to hold on to losing trades way too long. You're going to cut your winners much shorter out of emotion. Emotion can kill trading. And so you got to learn how to manage that first. And I think in that regard, it makes sense on a funded account program as opposed to, putting up 5K yourself and just risking thousands. And you're going to feel, while you still might be disappointed if you lose, you're not going to be down 5K, like some traders are if they put the money up themselves. Yeah, again, for me and CPI, guys, again, CPI inflation data drops too soon. We got about 1,000 people here. For me with CPI team, it's really important not to take super polarized positions ahead of it, in my opinion. The reason that's important is because, frankly, nobody knows not just what the numbers are going to be here for CPI, but also how the market is going to react to this. Nobody freaking knows if the market's going to go up, down, or sideways, regardless of what this data shows. And so in that regard, taking big positions ahead of it, trying to take some huge size leading into CPI is usually something that gamblers do. Like if they weren't doing this, they'd put it on, they'd go play a slot machine at the casino or put it all on red or whatever it is, right? And so again, you got to look to where there's an actual edge. And in this regard, there's no edge doing it, in my opinion. There's no edge. Like you might get it right. You got a 50-50 shot in terms of direction to get it right, but that doesn't equal skill. You got a lot of big time gurus on social media that make these big bold predictions about CPI and PPI and FOMC decisions, and when they're right, they act like they're just the smartest guys ever. You got a 50-50 chance, and if they're wrong, they just never mention it again, or they say it's, my favorite is they say it's manipulated. Like in the end, people just, there's egos floating around here. Yeah, the $11 sale is over. All right, let's check out the earnings too. Again, looking at our poll looking at our YouTube poll or our Twitter poll. I mean, we got a decent amount of votes. 40% think we're going to come in high, or 60% think we're going to come in lower. Again, CPI is the big boy today. Let's see if we get something good. Again, hit that like button. We got almost 300 likes. We can do better. We got over 1,000 here. Yeah, I mean, I don't think anybody's hurting for an $11 sale. I think what a lot of people miss out on, right, is that one of the reasons people are wealthy is because they're smart and they're cheap, right? Like people might not understand this, but like, again, I've said this quote many times, and the quote goes, riches yell, wealth whispers. And so people with money don't worry so much about looking like they have money, and instead they take advantage of sales. They take advantage of cheap stuff. They penny pinch a lot of the time, and they try to retain their wealth. Of course, I'm biased on Top Step Cure, but I say that multiple times. They're a sponsor of mine. I literally, after every plug, I'm literally like, hey, I'm biased in their favor because they pay me money, right? I don't know of any other person on YouTube that does that. So, of course I am. That's normal. Yeah, I mean, Bob, you control, that's fine. I'd rather people not know what I drive, man. Please don't put my stuff out there like that, you know. Retail lives on, daily narratives. Rich create the narratives. Sad but true. Yeah, for sure. Hey, what's up, Chris? The Pinto, Chris? You're talking about the Pinto, brother? I don't think so, man. Yeah, but again, there's a difference. If you have the type of money that you want to do it, again, it's fine to have that type of money. It's another thing to like flex it a lot. I don't like flexing what I have. Again, if I wanted to, again, the house that I'm in right now is a very nice house. If I really wanted to look rich and sell you guys a day trading course, I would. I would rather the privacy behind it. Anyways, we got 15 minutes here, 15 minutes. No, it depends on how much. Right, exactly. Porsche over Ferrari? I don't know, man. Porsches are cool. Don't get me wrong, I love Porsches. But all right, guys. Hey, CPI, 15 minutes. Really, we got about 16 minutes left, but that's all right. Bitcoin 35K today. Yeah, we'll see what happens with it. I get Bitcoin at 36.7 thousand, 36.6 thousand. I don't know what CPI is going to show up at either. I really don't. Hey, what's up, Yelton? Porsches are cool. Ferraris are more head turning. The name of the company is FTX. It's a cutting-edge, high-tech crypto firm out the Bahamas awaiting imminent patent approval on the next generation of crypto trading now. Selling garbage to garbage men is the quote. All right, guys. Again, I'm going to break down inflation, CPI, PPI, all the other inflationary things for today. So, inflation numbers drop in about 15 minutes. What I mean by inflation numbers is the consumer price index. Now, while it's not the Fed's preferred inflation metric, it is the most watched metric. It is what gets the most eyes on it relative to any other inflation metric. And today, again, it drops in about 15 minutes. It indicates how high prices are for consumers specifically. That is a big release. Usually we have it in we have this type of inflation release in two sections. The first is CPI. The second is PPI the following day. CPI is for consumers. PPI is for producers. And today's report is expected at 3% for base inflation year over year and 0.3% month over month. The thing to understand regarding CPI today, guys, is that simply CPI is going to influence what happens in the December Fed meeting. So in the FOMC meeting on just December 14th or 13th, what today's CPI report as well as tomorrow's PPI report does is influence what the Fed chooses to do. Now, currently, 86% of analysts and votes are expecting a pause or a skip on rate hikes. You know, the Fed raises rates aggressively if inflation is really bad because raising rates influences banks to a negative way, like raises hurts bank margins, and in turn banks raise interest rates to consumers, and then since the interest rates are high, consumers stop spending as much, and then businesses lower prices to compensate for it, and thus rate hikes eventually combat inflation. But it has a lag. It takes about a year to take effect. But with that said, if inflation is still really bad, like if CPI comes in really high the Fed is much more likely to want to raise rates and take a more hawkish monetary policy, hawkish meaning restrictive. And so, again, in that regard, today's CPI report will influence what the Fed chooses to do. And I'm sure if inflation comes in really hot today, it's going to be more likely that the Fed raises rates. It still not might be the most probable thing that happens. It's still pretty probable that a pause or a skip is going to happen. And that's personally what I think is going to happen, regardless of what this data shows, unless CPI comes out really, really hot today. I still think the Fed is going to pause or skip in December, even if we come in slightly over expected. Now, again, higher inflation generally equals more fear in markets and more bearish action in that regard. And so if inflation data today, if CPI, core CPI, month over month and year over year come in higher than expected, the market will probably fall. Probably, because we can never know for sure, and it's not something in which you want to take. It's not something in which you want to think there's a very there's a reaction that has to happen, like a guaranteed reaction. It's just not that easy, and so you always want to take a cautionary stance ahead of these reports. Again, tomorrow, this is not the only report this week. Tomorrow we have retail sales and PPI. Thursday we got jobless claims. I think the Philly Fed index, a bunch of stuff dropping for the rest of this week. And then next week we have Nvidia earnings. We got the FOMC minutes report. And so we got a lot of stuff coming out over the next few weeks. But you can see the NASDAQ starting to rip up. We're at 378.30s right now, 378.30s. And so, yeah, let's do this, guys. We still got 12 minutes. We got about 1,500 people right here. We still got, over 10 minutes left. Powell will pivot later so we get cheap stocks and crypto before real pump. Maybe. What's up, Wretched? What's up, Mo? What's up, Rig? What's up, Cat? Bar. Crash coming? Maybe. They say this every CPI report, though, brother. It'll probably either fall or start ranging on a daily. I'm going to buy an Audi A8 or Q8 as a gift for my parents. Hey, that's nice. Pause just to help Santa rally. Yeah, a lot of the time there's a Santa rally. Yeah, Ferraris are cool. I like the new Vets. I would probably buy a new Vet because I know it's a domestic car. Ferraris are going to be really, really expensive to fix if they break. Will gold go high? I don't know. Gold currently sitting. We got 10 minutes left, guys. 10 minutes left. Gold currently sitting at about 1950s here. We don't know what's going to happen. Again, we'll cover it as soon as it comes live. And again, we always do this every week. Every CPI report, we cover this, guys. And so, again, if you haven't already, hit the subscribe button, hit the notification bell. I appreciate it. And yeah, the reason we get thousands of people here for this is because we cover it quickly, very quickly. So again, subscribe if you haven't yet. Q pushing up, Tesla still moving up. We can look at gold. Again, gold is at about 1950s right now, under that 2000 level. But gold, again, has been one of the best performing assets over the last 3 decades here. If you look at a weekly chart, gold has 7x'd since 2020, 7x'd since the lows in 2020. That's a pretty big increase. Now, when we look at it come back down to size a little bit, since 1977, gold has 20x'd since 1977. So in about 50 years, gold has gone up 20 times its value, as inflation has gone up as well, though. So that's the one thing to consider. But gold is historically an inflation hedge, and that's what it's used for. And so instead of sitting on cash, sit on gold. Again, I'm not telling you what to do. No idea what you should do. Be safe. But all right, guys, CPI coming out. Michael Saylor could be 10x over the next 12 months, and supply is about to half. Yeah, I know we have the halving. All right, we got about 1,700 people here, guys. We still got about 7 minutes left, about 7 minutes, 8 minutes. Commodities down hard. Again, let me know what your percentage is. What's your month-over-month percentage? Expectations are 0.3%, 0.3%. What is your expectation for month-over-month increase or decrease in growth or inflation growth? Again, what's your percentage increase or decrease here month-over-month? Expectations are 0.3%, 0.3% is what I mean. What do you guys think it's going to show up as? 3.4%? That's the year. Y'all are giving me year percentages. I'm talking about month, guys. Month over month, 0.4%. Thank you, Bob. You were the only one that got the question right, sir. Shout out to Bob. 0.3, 0.3, 0.4, 0.3.5. I need that 10-year to drop. Trying to lock in mortgage rate. Mortgages are sketchy right now, bro. 0.5%, 0.3%, 0%, 0.33. Not going to happen like that, but that's all right. 0.2%, minus 0.1%. There, yeah, that's, I wish. All right, guys. So last time, to put it into perspective on the month, CPI came in at 0.4% last time, 0.4%. And so, again, year over year expectations are 3% or 3.3% year over year. Last time it came in at 3.7, so it's expected to slow a little bit year over year. Core CPI expected at 0.3%. Oh, wait, maybe people are expecting 0.1%. What are you guys showing for expectations here? Hold on, let me correct this real quick if I'm wrong in terms of expectations here. Okay, yeah, I'm sorry, guys. Regular CPI is expected at 0.1%. I'm sorry, I'm wrong. Regular CPI is expected at 0.1%. Let me fix this. It's 0.1%. So again, 0.1% is what we're expecting. So again, it's much different than what we were expecting, 0.1%. So yeah, again, we got about 2,000 people here, guys, about 2,000. Again, so regular CPI expected at 0.1%. Year over year expected at 3.3%. Core CPI expected at 0.3% on the month. And year over year core is expected at 4.1%. Core excludes food and energy prices. Gold's starting to run a little bit. I'm going to put the SPY up on the left side so we can watch both of them. We still got about 5 minutes left or so. About 5 minutes left. Okay, we got 2,000 people here live. Again, we're at 440.70s right now, 440.70s. Again, also, we're going to put it in sub-only mode. So if you haven't already, subscribe, guys. We do this live every weekday right here for free every day. We don't charge for content. My main thing is to give away free data, free economic reports, free stuff live. We stream all the big boy earnings, all the big boy streams in terms of economics. We cover it completely free. We don't charge a penny for anything. And so if you haven't already, subscribe. Appreciate the love. Low CPI is better, Crypto Night. It means inflation is lower. What's up, team? Yeah, hit the like button. We got 2,100 people here, guys. Again, we got about 3.5 minutes. 3.5 minutes. You guys ready? Snap looking like a king. I'm in Snap. Is it up? It is up. Hey, shout out to Snap. Cool. Thanks for the alert. I'm up on portfolio today as well. Apple's still looking good. Still in Amex, looking green. All right, guys. Hey, 3 minutes here. 3 minutes. You guys ready? Do you think these numbers are legit or are they manipulated by the power? I mean, everything's manipulated to a certain extent. But regardless of whether they're legit or not, they're going to influence the market. What do you think bonds are going to do? What is the 10-year at today? 10-year currently at 4.61%, 4.61. SPY pull it back to the 200 EMA and the volume weighted average price level. Again, we got 2.5 minutes. Yeah, all we have, guys, we only have one poll. We don't have any pop-up messenger. All right, guys, again, get ready. We're trading. We got 2.5 minutes here, 2.5 minutes. You get inflation data dropping very soon. All right, we got 2 minutes. I'm sorry, guys. Hold on. Here, my dog's barking. My apologies. All right, guys. Again, we got a minute and a half left. A minute and a half left. All right, guys. Again, the SPY at 440s. The Q was at 378. Nvidia rip it up at 489. I think that might just be on your end, Chris. All right, guys, less than a minute here, less than a minute. We got about 3,000 people here live. Did I put it in sub-only mode? I think I did. Okay, we did. Good, good. Again, guys, 45 seconds, 45 seconds. Yeah, I'm going to pause this because, again, we're a little bit late on the poll. We got 40 seconds left, 40 seconds. Here we go, guys. It's time. 30 seconds here, team. 30 seconds. It sounded really country. 30 seconds, guys. I'm ready. 25 seconds left. Again, make sure you hit the live button next to the play button. Make sure you're fully caught up on stream. You want to make sure your live button looks red. Your live button looks red. All right, guys, 15 seconds. All right, here we go. Here's the report. All right, market is flown up right now. Market is ripped up big on this data here, released big on this data report. CPI came in at 3.2% on the year, 0% month over month. 3.2% on the year, 0% month over month. Core CPI came in lower than expected at 0.2%, 4% core CPI year over year, lower than expected all around for everything. And again, the market has ripped up. The 444s on the SPY. The Q team is all the way up at 382s right now. A huge rip. Nvidia testing 494s. A big rip. Wow, lower than expected in everything. Everything came in lighter than expected here. 3.2% on the year. Regular CPI came in at 3.2% on the year and 0% on the month. We had no increase in month-over-month consumer prices relative to last time. They expected 0.1. We showed up at 0% month over month. 0. We'll put this number up on screen. Core CPI lowered as well. The market is flying up right now. Flying up right now. We'll put this up on screen. Great report. Honestly, great report. Yearly, we came in at 3.2 versus 3.3. And again, this is why y'all are over predicting crashes because of bias. Again, year over year came in at 4% for core. 0.2% core CPI month over month. Everything looks really good. The bond yields are falling now. All right, so here's everything right here. Again, much better inflationary data. Much better inflation data. Way lower than expected on everything. Again, hopefully you guys weren't too short. Yeah, 10-year is dumping down, and understandably so. Bonds are competitive with stocks. But there we go. Again, this is why you have to ignore the crash predictors. Because, again, my portfolio is looking lovely right now, too. We got the smooth sounds of John in the morning here. Apple rip it up, too. I'm going to just keep holding Apple. AMC's even green today. That's nice. Microsoft flying up. Oracle's ripping up. I'm still in Oracle. Walgreens is even green today. Oil's dipping down a little bit, but again, my portfolio is looking nice. I'll take it. Powell's going long today. Yeah, we'll see. And again, if you want to check out one of my sponsors, check out Top Step, funded account program. If you want to day trade this release, we're about to. In futures, I can day trade the S&P, the NASDAQ, the Dow. In futures, no PDT rule. I can day trade short. You can see I can buy market, sell market, buy bid, sell the ask, just like stocks, but there's no PDT rule. I can day trade short as much as I want in futures, no PDT rule. I can day trade the SPY, which is very similar price action to most blue chips. Patterns are very similar, but there's no PDT rule. And the funded account programs are useful because they give you a demo, they test your skill. If you can pass the testing on a demo, they fund you. If you lose, it's not the end of the world. The base one's $49. If you're good enough to pass it, you get $50K in funding with a 90% split. You get to keep your first $10,000 in profit. And so basically, if you build up a cushion and you make $10K in your funded account, you keep $9K. And that's not even including your first $10K in profit that you get to keep. There's free funding coaches, all that good stuff. We're going to go ahead and buy this dip and see if we can catch a bounce. Although I do think we're up a lot. But again, we're going to go ahead and buy this dip. Very volatile to trade, but we're going to have some fun in this combine account. But yeah, if you want to try with me, again, just taking the challenge, build your skill. It teaches you how to trade. They are a sponsor of mine. And so I'm biased, of course, in their favor because they pay me money. But if you want to check it out, here's the link. All right, so we got two contracts of the regular E-mini here. We got a little baby dip. I just want to see us pop real quick. Let's see if we can. Again, we took advantage of the $11 combines yesterday sale. So we can take a swing here in this one. And if we lose, we're okay. I just try to take advantage of the volatility. If we lose, I'm okay. I just want to see us rip up here. We're pretty much flat on the trade now. And again, if you want to check it out, there's the link in the chat. You can also see the link in the description as well. Again, my combine's $11, so I'm not risking anything substantial here. I'm essentially risking $11. Hopefully you were able to take advantage of the sale yesterday. And again, stick around. We are going to be day trading the opening bell live. All right, so we got this big surge up here. We got big 5 contract sizing here, having fun with it on these $11 combine sales. Let's just pop up a little bit if we can. Maybe I should have done it on the NASDAQ. How's the NASDAQ? Looks to be really nice too. I see Nvidia skyrocketing up here to 496s. Nvidia's getting ready to hit 500. All right, so there we go. We're flat. We're slightly green now. Big increase from CPI. We'll see if it follows it up. A lot of the time, I think people short these type of moves because it does a lot of the time reverse quick. And so I think a lot of the time people short these type of moves. Yeah, I don't know. I see. Again, this is the $11 combine. So if I lose it, I'm down $11. It's not the end of the world. Like, we're just using this volatility to try to get funded or build up some cushion really quick ahead of the open. And some of these, we bought like a bunch of them yesterday because combines were only $11. The 10-year falling down, and we're flat on the trade now. But I do want to give it time to move up. There we go. Start to see some increases. All right, so we just took some profit there. We keep unloading this as we can. All right, and we're gonna sit on the rest. Yeah, again, the Q up to 383s right now. 383s. Again, I'm going to sit on the last contract since we can. Try to give it time to work. I could also add to it. I'm watching the NASDAQ start to fall. I could also add it right back. And And again, this is the futures market. You see I can buy market, buy bid, sell the ash, just like stocks. I might add a little bit back to this. I see a dip, a bounce potentially coming here. So if we start to dip more, I'm just going to add back to it. Again, this is why, like, bro, every major economic report, you get people predicting crashes. And again, they're just wrong every single time. And people wonder why I'm so biased against bears. It's because they're wrong every single time. And then when they are wrong, they end up getting weird about it. Like it's my fault they're wrong or whatever. Or they cry manipulation or whatever it is. In the end, we've been raising rates aggressively for years now at this point in time. Like that's going to start to do damage to inflation. Because by being really bearish in these reports is basically saying that inflation is still really out of control. And I'm not saying it's not, but I think it's all relative. The SQ is the short Q. It's the NASDAQ short ETF. All right, so we got two contracts here. It's a little bit larger sizing. We've been consolidating now since CPI for like 5 minutes now. So I don't mind buying this in anticipation of a potential final bounce back up some. But again, anything could happen. We're completely flat on this specific trade right now. Oh, inflation data all in low expected Yelton. So everything came in low. Literally everything. Every metric today came in low. CPI month over month, year over year, core CPI month over month, year over year. It all came in low. Soft landing means that, again, for a soft landing means that we're going to raise rates aggressively to combat inflation, but also avoid a recession. You know what I mean? I think right now in that regard, we have to look at GDP. I'll have to look at what the next expectations for GDP. All right, so we're still popping up a little bit. I'm going to go ahead and lock in a little bit more profit there. Again, this is the futures market. I can day trade the S&P. I can day trade these economic reports in futures. No PDT rule. Very similar to day trading stocks. There's just no PDT rule. And again, if you want to check it out, here's Top Steps link. They are a sponsor of mine, of course. I'm biased, but check them out. Try to be patient. We have a cushion now that we can like play with, and so maybe I can add back. I'm watching the Q bounce as well here. Yeah, CPI's out. It might be right here below me. It could be. I'm not saying it is. It's possible that it might be. All right, so again, we're trying to surge up. We got a cushion on the day. We can let this work a little bit. Should have kept my 5 contracts, to be honest. All right, I'm just going to unload there and get out. We're up a couple hundred on the day now. We got a nice little cushion trading this. We might switch to the NASDAQ, which is the Q, right? So like, again, you can see the SPY, it's the same price action. SPY finally starting to rip up after buying that dip. And I don't want everybody to copy me there. Here's the NASDAQ though. So here's the Q. You can see it's the same thing. It's the same price action. Nvidia just broke highs. So I'm going to buy this, and it's much more volatile and risky, but we have a cushion. See if we can build up a larger cushion on the day. 65. All right, so we just unloaded there. We're up about 250 on the day now. Scalping this. Again, my job is to build up a cushion on this funded account program first. We're watching the Q rip up and then day trading it essentially on the NASDAQ, which is the same price action. What's Bitcoin price? Yeah, I'm using Quant Tower as my platform. Bitcoin popped up over Bitcoin, technically green on the day. Nvidia team is what's really running. And again, Nvidia is about to hit $500. So again, let's look at Nvidia right now. That's Nvidia on the left side. Again, it's about to hit 500 right now. Look, here's Nvidia right here. So it's at 498. So Nvidia surging up, about to hit 400 or 500. A complete 180 relative to the last few months. Look at Nvidia on the top left, or on the left side here. Huge surge. NASDAQ still trying. I'm not sure, comma, ask them, brother. Ask them, man, you know. Yeah, these are S&P 500. The NASDAQ is what this is. Nvidia over 498, still rising. Again, my portfolio is looking really good right now. Walmart, Google. Beautiful CPI report, though, team. All right, we're taking a little bit off. We're taking some profit and some stuff too because we're up so much on this report. You see Coca-Cola. I'm pretty sure I'm pretty green on Coca-Cola too. Yeah. A little bit off of Coca-Cola. You love to see it. You love to see it. What do you think about the S&P? Will it drop? I mean, it might drop relative to where it's at now, but again, the S&P, the NASDAQ are up a lot. This is the NASDAQ 100. Here's the S&P right now. Again, it's up a lot relative to where it was. Again, here's the E-mini. Again, the E-mini, this is the S&P 500 right here. Again, here's the CPI report. CPI came in much lower than expected all the way. What did gold end up doing? Gold pushed up to 1965s right now. So seven big companies are 28% of the S&P. Bitcoin 40K or no? I think it could hit 40K. I think a lot of it is all crypto traders are imminently waiting for. All crypto traders are imminently waiting for the Bitcoin ETF approval. All right, Nvidia testing highs again, still at 498s right now. This is a big influence. Again, Nvidia is a heavily weighted stock. It's like the number 4 weighted stock in the S&P and NASDAQ. And so as Nvidia starts to push up, and that's really why the market has pushed up so much like it has over the last couple weeks, really. It's also why the market is so green on the years, because Nvidia flew up this year, had crazy big price increases, and so, yeah, it dragged everything else up. So now as Nvidia just tapped 498.50s, we're $1 away. Here's 500 right here. It's a big milestone level. $500 for Nvidia. It's a big milestone level, and it's churning towards it now. It's almost up to 499. Broke highs again on Nvidia. Again, that might drag the S&P and the NASDAQ up with it as well. This is a mild pump. I mean, well, let's look at it. SPY is up. SPY's up over 1%. It's up to 440s. Yeah, so the SPY is very close to the high of the year. The high of the year is 459. The SPY's up to 445. So we are less than $15 away from the high of the year on the S&P 500. Yeah, I mean, people saying it's mild are usually just people who took the other side of the trade, and you know, again, egos float around in the market so heavily. Yeah, I'm looking at the economic reports that are scheduled to release here, guys. And again, stick around. We are going to be day trading live today too, so stick around. All right, so next week we don't really have that much, I don't think. Next week, existing home sales. We got durable good orders, Michigan consumer sentiment. Thursday, of course, we got jobless claims and all that stuff. Manufacturing PMI on Friday. Friday, we got manufacturing and services PMI. Next week, the big thing is Nvidia earnings. So like next week, the big boy thing is Nvidia earnings on the 21st. On Tuesday of next week, we have Nvidia, HP, Autodesk earnings. Nvidia is the big boy, though. Nvidia is the one that's going to really heavily influence markets. That day, we also have the FOMC minutes report. And so that day, we're going to stream the FOMC minutes report, and then we're going to pivot to Nvidia, and that's going to be the biggest day next week. And so we'll see. Again, S&P starting to creep up, starting to move. Yeah, you can hold positions if you want. Thank you, Terrence, my guy. Thank you, man. Is this like your work? It's one of my works. Do you think gold will retrace? I'm not sure. Yeah, Chris. I mean, again, the reality of it is diversification is one of the best things you could ever do. You know, a lot of people don't realize that, but diversifying when you're investing and trading is the easiest thing to protect yourself. Fools bet really big on one specific thing, you know, in trading and stocks. Like fools bet really big on one stock. Fools bet really big on one thing, right? You have to diversify. You know, if I was holding something for the next 20, 30 years, what I would probably do, and again, I'm not telling you what to do. I don't know. I can't guarantee this is going to perform well. Of course, nobody can. But again, what I would do is I would buy the S&P, buy the NASDAQ, buy gold, buy real estate, buy some bonds, and I would sit, you know. Maybe if I liked some individual stocks, I'd buy and put some money on some certain stocks, but certainly not all my money. That's a sucker's bet. It's definitely not penny stocks because a large majority of penny stocks fail. And one thing that big money does that retail doesn't is big money identifies the scams, which is penny stocks. They identify the nonsense. They don't get fooled by marketing. They don't get fooled by, Aerotine International, cutting edge firm out the Midwest, awaiting imminent patent approval on the next generation of radar detectors. They don't get fooled by that. So they don't buy nonsense. They take, if you want to know what works, follow the big money. And big money doesn't buy penny stocks. They don't really buy penny stocks. All right, guys. Yeah. Yeah, I mean, let me clarify, right? There's a lot of ways to look at this, and I don't mean to be too biased. Most billionaires are actually made from betting really big on one specific thing, right? Like most billionaires are actually made in that way, right? That's how most billionaires are made. It's the truth. But penny stocks are crap, and that's not the one big thing you bet money in, I think diversifying when you're holding long term is a good thing. Now, if you're gonna put all your money in, or if you're not all your money, if you're gonna put a bunch of money into one specific thing, you can. And I think if you really want to have crazy big returns, it's necessary. But you need to do so understanding that you might lose that money, right? And what I'm talking about when I say I would buy the S&P, the NASDAQ, gold, real estate, bonds, is safe long-term income, right? Like that's what that is safe long-term income. Now, you got to take risks on the other side of it. I don't mean to preach too much about diversification, because I think if you're really trying to have crazy big returns, it's a different story. And you have to really, what you have to do in that regard is you have to get ahead of the market. market in certain ways. You have to figure out emerging technology and like there's a lot of nuance behind it, but yeah, that's basically what you got to do. Why is the SPY up? Because CPI came in lower than expected universally. Nah, most billionaires are not made from YOLO option trades. Most billionaires are made from starting their own business, and that business going public is what makes most billionaires. They start a business. The business is successful. Most of the time, the real big ones are tech businesses, of course, that gain widespread usage, and eventually they go public. You know what I mean? When they go public, that's when they really make their money. That's usually where most billionaires come from. CPI lower than expected plus pause. Yeah, again, I think we're even more likely to pause now than we were. Everybody's saying we're going to raise rates in December. Again, guys, like you have to understand, look at the E-mini break highs. So the E-mini rip it up, breaking highs. The Nvidia chart is still at 498. If we look at the chances for a pause, again, you can see they pivoted. So 99.7% of people are expecting a pause or a skip now. 99.7% of people are expecting a pause or skip. Nobody's expecting a rate hike now. And in fact, 0.3% are expecting a 25 basis point cut, right? So 0.3% now expecting a 25 basis point cut. Again, as I've said many times, guys, you can't be too rigid in your directional bias, right? Bull versus bear. You can't say the market's going to crash and I don't care what the data says, right? Again, you got to be rigid. You got to be flexible. You can't be rigid. You have to understand that we're almost certainly not going to raise rates in December. It's just almost certainly not going to happen. Most of the time around this, the real risks are not right now. Okay, so like the real risks are not right now. I think per this inflation data, and again, tomorrow we do have PPI coming out. So PPI inflation data drops tomorrow. Be here bright and early. Same thing, 8:30. We will stream it live. We'll report the data very, very quickly because that's what we do. But that big one drops tomorrow, guys. It drops tomorrow. And so again, we'll be here live as well. Gold pushing up also. S&P pushing up as well. But again, I think the real risks are in next year. You know, because right now we're probably going to have a Santa rally. The economy tends to thrive during the holiday season because more people are buying stuff. That causes more optimism. You know, inflation data came in low. I think the next couple months are going to be fine. Maybe not. I could be wrong. Again, I certainly could. You know, so again, we'll see what happens. But this is an optimistic sign, I think. This is an optimistic sign. I'll see if the inflation data tomorrow comes in favorably. But again, I think what's probably going to happen is in December, we're going to pause or skip again. The real risks of a recession, of a market crash, I think are next year, right? Next year. I think they're delayed a little bit until next year. And again, let me know what you guys think. Do you guys think we're going to hit a recession? If you do, when do you think we're going to hit a recession? And if you don't, explain why. Well, we're going to finish this poll. And we will ask, what's a good question now? Does the SPY close above or here? Good question. Does the SPY hold its gains? Hold its gains today, yes or no? That's a good one. Again, the E-mini rip it up. Nvidia pop it up a little bit. My portfolio is looking nice too. Apple up. AMC we're up a little bit on it too. Amex we're up. That's nice. Citigroup we're actually green on. That's cool. Chewy we're actually green on. Ford we're still red on, but we're green today. Gold doing better today too. Google doing good. Honeywell doing better today for sure. Microsoft looking lovely. Oracle looking good. They changed the definition. We have already hit recession. We had 2 quarters of lower GDP. The question is when we will have a depression. Yeah, but a lot of people predicting that we're not in a recession right now. Of course, GDP is just not where like GDP just doesn't indicate that right now. The real question here, let me keep zooming forward. I'm trying to see when the next GDP report drops. Again, a recession is technically defined as 2 consecutive losing GDP quarters, and I think they now added in high unemployment. Now, again, we're looking at this. I'm trying to see when the next report drops. We got CB consumer confidence, not next week, but the week after. GDP data. Okay, so GDP data drops on November 29th is GDP data dropping on November 29th. So that's going to be the next GDP report. I think we're also going to have PCE that week as well. Personal consumption expenditure. Yeah. So we're also going to have PCE data Thursday that week. And then Friday. Yeah. So again, PCE, not next week, but the week after that. PCE is actually the Fed's preferred inflation metric, right? So it's what the Fed actually uses to gauge inflation. It's called PCE. That drops not this week, but next week. And so we'll see if we get anything favorably there. Powell just closes the door on inflation. Yeah, I mean, again, inflation's eventually going to start taking some damage. The rate hikes, he's not doing this for no reason. Like we're raising rates, and that's going to start to combat inflation. No recession, we pivot next year. Trump gets a statue. Yeah, maybe. Yeah, and again, though, I understand a lot of people think they changed the definition, and to a certain extent they did, right? But the problem is that that didn't hold, and GDP data has gone up since then. And so if we were in a recession a few years ago, it was a very mild one. And that's not the argument here. The argument here is whether we will hit a recession next year. Again, the problem here, guys, like, again, the economics of all of this, right? To understand the economics, right? The problem is that, the Fed raises rates to combat inflation. And again, we showed you guys the graph earlier about how much the Fed has raised rates, and you can kind of see that here. So, like, here's how much the Fed raises rates. Really aggressively, from April to from April of 22 to April of 2023, really aggressive rate hikes. It takes at least a year to feel the effect of that. And so here's October, November. We still have all these rate hikes that banks are going to start to feel the effects of moving forward. And, a soft landing means raise rates aggressively to combat inflation, but not actually hit a recession. Because by raising rates, there's a counter to that. It affects the economy. And so, yeah, that's the real question is, are these rate hikes, all the way back here, are all these aggressive rate hikes, which you can see these are like 50 basis point rate hikes, 50, 50, 50, 25, 25, 25. Are they going to cause a recession next year is the question. I don't think it's going to be this year. I think inflation data looks favorably, and I think we've been pausing lately. But next year, maybe. We'll see. Nvidia still started to dump down. Let me know what you guys think. CPI is inflation. It's the consumer price index. It's how much prices are rising for consumers. PPI is the producer price index. It's how much prices are rising for producers. All right, guys, we still got 1,300 people here live. And again, if you want to day trade with me today, I'm going to buy the E-mini. This is a platform called Top Step. I'm using Quant Tower. Again, Top Step, they give you a demo and they test your skill in futures. And again, you can kind of see I'm buying market, selling market. I can buy bids, sell the S flat. And just like stocks, I can day trade it just like stocks. I can day trade the E-mini, the NASDAQ, currencies, gold, silver. Patterns are very similar to blue chip stocks, but there's no PDT rule. And so if you want to day trade, most pro day traders actually trade futures because the liquidity is better. They can get access to stocks through something like the E-mini or the NASDAQ. You can't actually day trade stocks, but you could day trade the index funds that hold them. And again, in that regard, the easiest way to try it out is Top Step's funded program. in which, again, they give you a demo, they test your skill. If you can pass the test, they fund you between 50,000 all the way up to 150K with a 90% split once you're funded. And again, they pay out millions every year. They fund thousands and thousands of traders every year. They've been around for over a decade. And again, this is incredibly useful. And the way I describe it is because when you learn to day trade, you have to learn how to trade under pressure. It's just part of it. You have to learn how to trade under pressure. Now, you can either put up thousands yourself and risk thousands so you can learn to trade under pressure, or you can try a funded account program. If you lose, you're out a very small amount of money. You know, the base combine right now is $49. Yesterday it was $11. But if you're good enough to pass it, you still get a lot of the rewards of putting up the money up yourself, just less risk than putting the money up yourself. And so in that regard, it's the best of both worlds. A great way to learn how to day trade, just taking the challenge, build your skill. But again, they are a sponsor, of course. I'm certainly biased because they pay me money. But if you want to check it out, here's the link. All right, so we're flat on this day trade right now. We're flat currently. All right, so now we're down a little bit. We've already built up a cushion here, though, which is nice. So we already have a really nice cushion on the day. So if we lose, we're still all right. Up over 200. Watching Nvidia, because Nvidia is going to influence this as well. When Nvidia moves up, it's going to drag the E-mini and the NASDAQ up with it. So we watch Nvidia closely because it's just going to have a heavy influence. Nvidia is the number 4 weighted stock. All right, so we're flat. Trying to be patient here and wait. Hey, all good, Blake. Thanks, man. This year it didn't go up 3%. This year it went up 0%. So again, the natural state of the market, guys, is that prices rise over time. You know, it's one of the reasons home prices now are much more expensive than home prices 50 years ago, because inflation is a thing and prices rise over time. What CPI gauges is the rate of that increase, right? And so this month it didn't increase at all month to month. It was at 0. You know, last month it increased 0.4%, right? And again, the natural state is that prices rise over time. And so this inflation report is gauging how much they're rising. All right, so we're going to get out with a cool little $50 gain. We're up a little bit under 300 on the day now. Got a 6-to-1 win-loss ratio on the day. Yeah, for sure, Doom. They get Nvidia all the way up to 497. You can kind of see how, again, if you want to know why people day trade futures, here's Nvidia's chart and here's the S&P. You'll notice just how similar they are, right? And you can day trade this right side here that you see me doing. No PDT rule. Day trade short, buy market, all that good stuff. Day trading in the pre-market as well with market orders, which is really nice as well. No PDT restrictions. In that regard, it's useful. Again, you can check out the link in the description, but the E-mini is down there. This is insane. Stocks ripping amidst world instability. Yeah, but stocks are ripping because inflation data came in better than expected. You know, markets aren't going to go down forever, guys. And so you don't want to get tricked. Like, the biggest losers in the market are not long traders most of the time. They're short traders that choose to ignore the natural state of the markets, which is that they go up over time, right? Like the S&P is going to go up over time. The NASDAQ's going to go up over time. That is an inevitability. It's going to happen. You know, the chance, it's not 100%, nothing's 100% in markets, but it's 99.9% chance the S&P is going to go up over time. And again, I've talked about this data point earlier. It is incredibly rare for the market to have a bearish trend on a yearly basis for more than 1 year in a row. That's only happened 3 times since the 1920s. 3 times since the 1920s. And so betting that, number one, if you look at the SPY, we've already had that bearish year. It honestly, if you want to know, back here, everybody said we were going to crash. There's always instability going on in the world, number one. And if you watch the news, you might think that the world's just in a constant state of chaos. And to a certain extent, that's true. The world is in a constant state of chaos, but it always has been. The difference between now and 75 years ago is that now we've got 24/7 news coverage showing you all the crazy ish that's going on across the world right now. 75 years ago, we didn't have that. You'd find out, 2 months, or you'd find out a couple weeks later what was going on overseas. And so the world is in a constant state of craziness. The world's not any crazier today than it was a decade or a century ago. And if you think it is, think about what happened with World War II, a crazy dictator, there's a lot of craziness in the world, and there always has been. But the natural state of the economy and markets are that markets are going to go up for the sole reason that prices go up over time. And again, we've had that bearish year already here. The last time we were anywhere close to the highs was, a year and a half ago. And so the market's not going to go down forever. We're not in some constant state of crash, regardless of what your favorite gurus tell you, because they're trying to get clicks. It's something I feel like a broken record about, but I think it's important that people understand what the market really does, which is that the market's going to go up over time. It's not an arguable thing. It's statistics. And so you just got to be smart and understand that, and don't overestimate crashes because, again, Michael Burry is the prime example of this. Burry basically predicts 20 crashes every decade. Yeah, and again, I think people have political bias. They think again, if you dislike one administration, you're going to think the world is in a much more worse state. And maybe sometimes it is, right? But people have political bias, I guess is the point, and I think that makes them overpredict crashes as well. Really, over the next year, we're going to have elections, and a lot of the time the market goes up during elections because candidates want the market to look good during election season. So that's another nuance of it that you want to pay attention to leading into next year, which is election season. I don't know. I've thought about streaming the debates as well. Look at Nvidia, guys. Nvidia all the way back up to 498s. Yeah, we got a cushion. Here's my cushion so far, bro. We're up 280 on the day. You're wrong, John. The dollar and the economy are both going to crash. I wouldn't give it more than 60 days. Again, that's fine that you can make that prediction, and maybe I am wrong, sir. What I will tell you, though, is that I have had so many people come here and tell me that the market was going to crash. They've said it exactly like you. The market's going to crash. Just wait. And usually when they're wrong, they act like they never said it. Again, and I'm not here to say that we don't. Maybe we do crash. I don't think it's going to happen in the next month or two. I think that we're going to have a Santa rally most likely going into the holiday season. And then if we do have some bad action in markets, it's going to be early next year. So I don't even necessarily disagree with you. I think for the holiday season, I think for the rest of November and December, the markets are going to be okay. Maybe not. Usually we get something called a Santa rally, and I cover this every year, and most of the time it happens, but it's never 100%. Maybe you're right. Again, I don't know. What I'm trying to say, though, is that over predicting crashes is a sucker's bet. You can't be gullible, I guess, and fall for everybody that tells you the market's going to crash. Because again, people have been saying the market's going to crash for years, and it's still, again, what I always tell people is that people were telling me exactly like you're telling me the market was going to crash here. And of course, in hindsight, market had one of the biggest bull runs it had this year, right? And again, the people who are missing out on these bull runs, they're not the banks. They're retail traders. Retail traders are the ones missing out on this bull run because everybody's telling them the market's going to crash. And so fear rules and reigns. And they miss out on big bull years like we've had this year, you know, despite the pullback that we've had over over a few months now prior to the last 3 weeks. Yeah, all good. As Powell likes to say, the market is resilient. Yeah, Powell most of the time, though, is talking about the jobs market is resilient, meaning like we're raising rates in order to combat inflation, and when we raise rates, we're trying to push the job market down, and the job market's not going down, and so inflation is still elevated in that regard because of it, I think is what Powell most of the time means. But he might be referencing the financial markets like this. Maybe you're right. I'm not sure. Gold pushing up towards highs. It's at 1965 right now. If you look at gold, again, another one to watch is Nvidia. Nvidia churning up too, pumping up. Yeah, because the promo ended yesterday, KFC. Yeah, but if I did stream the debates, Chris, it would be just like this stream. It would be very, very neutral and unbiased, right? Like, I think people need that, is they need neutrality. I've always been somebody that I don't get wrapped up in politics at all. I dislike the whole realm of politics, and I think the more radical you get on either side, the less objective you're being. You know what I mean? And the more prone to, again, maybe I'm wrong, but I just dislike the realm of bureaucrats and politics. I would rather just avoid that if I can. And so you're right. I probably should avoid streaming the debates. I don't want to affect that stance. Pfizer? I think I'm in Pfizer right now. Yeah, I am in Pfizer. I'm down on it though. Average price for me is 33 roughly. We're at 29. It's a small trade. It's 15 shares. I'm down $50 basically in it. My thumbnail's not clickbait. It's just, I'll change it for you if it makes you feel better. But yeah, it's not clickbait. I don't know what the CPI report's going to come in as prior to it. I'm just kind of putting a thumbnail out there based off of previous CPI reports where the market's gone down. All right, guys, 15 minutes. Again, remember, tomorrow we have PPI. So remember, tomorrow we have PPI inflation data, the producer price index, the other side of that inflationary coin. So again, PPI might influence the market in a good or bad way as well. We don't really know. Let me know what you guys think. Maybe we should have done a poll on that, on what you guys think PPI shows up as. Here, just for you, I just changed the poll or the thumbnail. So again, we're not going to be able to predict direction, though, of course. All right, 14 minutes, guys, 14 minutes. Last year, everyone thought in 23 we would be in a recession. Sachs now says we'll be in a bull market all next year. Yeah, I mean, you could go contrarian too. Yeah, now hit the like button. You're welcome. Gold's still popping up. Look at it. What you want to watch today is Nvidia, though. Nvidia is the big thing you want to pay attention to for sure. There's Nvidia right now at 480s, or at 498s, roughly. Somebody said I need a haircut, bro. I just got a haircut, dude. I'm not getting another haircut. I'm trying to keep my hair as long as I can, bro. Most of my friends, All right, I don't think we have any other big earnings this week. Let's see the economic reports. So earnings this week, I don't think it's anything big. I think we have like Home Depot today, right? When were Home Depot earnings? Were they today? Looks like they were today. Home Depot has had a crazy run, but it might be. There it is. Yeah, Home Depot was this morning. SeaWorld. Nothing else big. The biggest one this week, there's three big ones that I'm looking at. Like three big ones that I'm looking at. We've got four. I'm looking at Target, not really the biggest one, but I'm looking at Cisco Wednesday evening. Not going to stream it. Not big enough for me to stream it, to be honest. We're looking at Walmart Thursday morning and Alibaba Thursday morning. Those are the four largest earnings reports that we're watching this morning. And again, we'll see if we get anything good for them. Market's still heating up a little bit from CPI, and so everything looks pretty solid there. Again, we're going to get ready to day trade actively at the opening bell. Earnings today included HD, SeaWorld, Canadian Solar, SFE. All right, guys, we're going to get ready to day trade at the opening bell, too. That's what we're going to be doing today. Be ready. Workhorse Group. Vincent. About 8 mining dropped. So Home Depot did have an earnings drop. And again, looking at the rate hike probabilities right now, 0.3% of people think we could possibly cut rates in December. Or 0.2% now. But yeah, you can kind of see here, most people expecting a rate hike of, 25, or most people expecting a pause. I mean, 0.2% of people think we're actually going to cut rates. Do you still research penny stocks before the bell? No, most penny stocks are crap. Again, I stopped trading them a long time ago because even day trading them, the edge is so small. It's just not worth it. People make so much money selling courses on how to day trade penny stocks, and they talk about millionaire students and like all this stuff. A lot of the people doing that haven't actually really day traded penny stocks themselves in a decade. And even if they made money a decade prior, the market has changed so much. Like a decade ago, you used to be able to make money in penny stocks by front loading from newsletters. So you could sign up to a bunch of newsletters, front load into those penny stocks ahead of the newsletters, and then basically get rich riding those pumps up, front loading, basically. And that's how a lot of the big time penny stock gurus right now made their money. But again, now they'll say, oh, I don't even trade. I've just got students. I teach. And it's like the market is so different now versus back then that like somebody teaching me now on how they used to trade back then is not going to work. In the penny stock market, the volatility, penny stocks get diluted, halted, offerings, all that crazy stuff, T1, T2 halts all the time. right? So even if you have an edge in terms of strategies, for penny stocks, like the probabilities are just stacked against you in that regard, right? But again, they're the easiest to market to traders. Like if you're a retail trader, it's super easy to market to you because you probably don't have enough money to put a big boy account up. And so it's confirmation bias. You want to hear that it's possible to day trade and get wealthy trading cheap stocks that you don't need a lot of money for. Everybody wants to believe that, but it's not really, I mean, I'm not saying it's impossible. I don't like saying definitive statements like that, but that's what happens, and that's the reality of it. And again, a lot of people are just wrapped up in it because of confirmation bias. And at this point, they might see the signs that what they're in is not really, but like they want to believe it. Yeah, I don't think they're going to cut. Here, I got to change the song. This is a little bit too much of... There we go. Yeah. Well, it's like the Wolf of Wall Street. Again, selling garbage to garbage men. Your job is to not be that garbage man right now. Again, Nvidia is still churning up over 498s. Again, the question is, will Nvidia hit 500 today is the real question. And again, maybe I just suck at penny stock trading. I'm not here to deny that. Maybe that's true. I don't know. This is my own opinion of it, though. Low float expensive stocks or inexpensive stocks are the same ones I'm talking about. I'm not talking about literal pennies. I'm talking about list me some penny stocks, guys. I'm talking about MMAT. I'm talking about SOS. I'm talking about you guys know. I'm talking about man. I start to forget the names of the penny stocks. Of the CEI. I'm talking about CEI. I'm talking about SOS. I'm talking about MMAT. I'm talking about these terrible companies that everybody that have all these crazy big followings of people that are just stuck in the positions. Those are the ones in which traders are getting taken advantage of. Again, I say it once, I'll say it again. Nobody cries manipulation more than somebody that's wildly wrong about a stock or an outcome. Nobody cries manipulation more. Egos float around in trading. If you say the market's going to crash and then CPI comes out today, comes in really low, manipulation. It would have been down, right? If you think CEI is going to be the next whatever, Amazon, and CPI ends up sitting currently at 30 cents, it would have done well, but manipulation. Manipulation. It's just, I don't know. I probably talk about it too much, but my job is to help traders, so I'm trying to help them. I'm not an angel either. I'm in this to make money, of course, just like everybody else. Gold pushing up at 1960s. Yeah, one of the Fed members is speaking, but it's not a super influential one. So we got some Fed speakers. But today it is Barr testifying in front of the Senate. And so it's not like it's Powell speaking. It might influence the market, though. It starts at 10 a.m., so just understand that if you're in short-term positions. All right, guys. Yeah, I'm looking at other stuff. Market opens up in 2 minutes, team. 2 minutes. Nvidia dipping down to 497s right now. The E-mini hasn't followed suit yet. I'm going to short this real quick. We already got a pretty big cushion. I think we might get a flush as Nvidia follows it down some. We're already up a little bit. There's 25. I'm just going to make my little $25 gain. We're up over 300 now on the day. Here's my graph. We got a 7-to-1 win-loss ratio day trading today. But yeah, the opening bell's here too soon, and the volatility that comes from that's too much. So we're pumping towards 120,000 subs here, team. We are ripping up towards it. Again, subscribe if you haven't yet, team. Hit the notification bell. CEI is a terrible company. It's talked in a lot of retail traders. It's got one of the worst long-term charts I've ever seen. Yeah, there's less interest in CPI days, but they're still pretty big. Yeah, the reason I'm biased against CPI is because I've been saying that I'm very consistent, man. I've been saying the same thing for freaking years. Years ago, I think it was CEI was running, and there's the opening bell, guys. So the market just opened. Try to day trade. All right, so again, S&P's ripping up. Nvidia's dipping, though, which is a really interesting dynamic of it. The only thing I can think of is maybe Tesla rising up some. Yeah, Tesla at 235s, 236s this morning. Wow. So let me look at the NASDAQ here to see what the NASDAQ is doing. NASDAQ is rising, which means like tech, aside from Nvidia, is leading the way. A lot of stuff's down, though. What's bouncing right now? Apple? Not Apple. Home Depot is what's bouncing right now. Wow. Yeah, I'm going to take a little bit off of Home Depot. Nice. MGM doing nice too. Cool. All right, so big dips on Nvidia. I'm going to short the S&P right now. I'm going to short it. It's a little early since the opening bell, but we do have a cushion. We're up 40. Two up wicks indicates selling pressure a lot of the time. I don't know for sure, though. Maybe we just rip up in my face here. I'm going to start to cut this. I don't want to start to get in a test of the high of the day, though. Yeah, I'm going to have to cut it. Still up like 150 on the day. We'll wait now. I'm watching the NASDAQ here creep up. Depends on what you guys think Nvidia is going to do. See if the market holds. Again, we got some bull runs. Big flush, bounce back. Watch Nvidia. Nvidia trying to test that 393 level. Looking weak right now in markets. See, we start to retrace. Nvidia starting to retrace a little bit. Equities portfolio, we're up about 600 in equities right now. Oof. Just caught a decent amount. Another beautiful trade here. We're up about 350, 370 on the day in the NASDAQ. Trying to gauge extension here. I just made another 200. Scalping the NASDAQ here as Nvidia rips up. We are up about 560 on the day or so, 560. Again, I see we're starting to test the top of that trend, but we got to watch Nvidia as well. Nvidia at 490s. All right, we just caught another spike. Cut it. Scalped it really quick. We are up about 760 in this one on the day. Kind of grinding it up after we have a nice cushion on the day, taking larger risks now. Nvidia start to crunch up. We're going to buy this dip right here. I see Nvidia starting to churn up. We'll add a little bit to it, take up to 3 contracts of the regular E-mini here, take larger risks since we have a really big cushion on the day. We're shooting for $1,500 to be honest, but one contract so far shouldn't. See, we didn't really have time to add to it, which is all right, I guess. Now we're up over 6 on the day in equities. I need to take profit in anything. No, not anymore. Maybe Amex. All right, so we could probably add to this position. Now we got 2 contracts here. I'm gonna take a little bit off of my Amex trade too. There we go. All right, we're flat on this. We got 2 contracts. Looking for a spike up here. Watching Nvidia. All right, we're gonna add one more position to it, see if we get a pop back up, and it looks like we're not. Yeah, the E-mini's turning, unfortunately, so we might have to get back to square one, break even. We'll give it one more second. Retracing back higher. See, I don't like what Nvidia is doing though. The good thing here is that I'm back to break even here after a big loss, which is the point. Very choppy sideways action since the opening. Boy, we got to wait for this range to break. All right. I'm going to cut some of this risk off here, team. That's what you see me doing. I just don't like it. I'd rather get out small loss, still up almost 7 on the day, and then take another contract and reset. When I'm down big on anything, I got to protect profit. Even if this would have gone green with those contracts, we were down a little bit too much for my taste. I mean, again, here's my P&L on the day, so we're still up like 7. But I needed to unload size just in case this doesn't work, to protect myself. It's hard to explain, but I'd rather shoot for a small win than a huge win that's going to give back all the profit on the day already, even though I'm really shooting for 1,500 in profit on the day. Now I can choose to add back at a more reasonable spot and help my average improve if we get upward movements. All right, Nvidia is starting to run. Now I can add to this a little bit more. All right, we're going to take half off there. Just locked it in. Much easier. Nvidia is starting to run here too. So I'm going to start adding to this as Nvidia starts to creep higher. Team. Try to fix my average a little bit here and take it off quickly if I can. Maybe trading a little bit too active for my taste, but look at Nvidia run. I think this is going to drag the E-mini up with it. All right, took half off. Took another half off. Nice little pop. All right, so we're up 9 on the day, 900. We would have made more money there, but again, we're up 9 on the day. 3-to-1 win-loss ratio. Nvidia's starting to pull back, so probably mismanaged it a little bit, but still into the green. Yeah, I got to keep glancing over at my equities portfolio because I'm up a lot today, 700 or so. Nike. All right, so we get Nvidia right at this VWAP level. I don't necessarily trust it right now, though, because I think if Nvidia can't hold this level, then we're in trouble. But if it starts to look like it will, I will take another position here. I'm going to take one contract here, although this is risky. I'm anticipating Nvidia bouncing like it is right here at this level, and if that happens, we should make some money with it, but got to be smart in that regard as well. All right, so we're losing here. I'm just going to cut that, get out small for a loss, and be okay with it. All right, we're now scalping Nvidia a little bit. Nvidia is bouncing up a little bit too. All right, so here's my P&L so far in the day, up about 1,100 or so. Not a bad graph. I mean, again, we build up a cushion. We take larger risks once we have it. Can I move a bit to the left? Why? Yeah, I mean, I also watch other stuff like outside of what y'all see. Like I have 4 monitors here, team. Um, all right, so we just scalped a little bit more. Yeah, we're up 1,100 in a day or so. Here's the graph. Technically 1,085. You can see my win-loss ratio right here is at 2.57 to 1. And again, I'm using a risk management system for this, in which, like, okay, I build up a cushion. Once I build up that cushion, my main job when I first start the day is to build up a cushion of a couple $100, right? $100 to $200. And when I do that, I only take one contract, literally one contract only. Once I build up that cushion of a couple $100, then I'm allowed to scale up my size some, right? And that way, if I scale up and lose, I'm more break even, maybe small loss, maybe small win, but it's not a huge drawdown, right? Then I can scale back down in size and try to build up another cushion. And if I fail to build up the cushion, say I lose $200, then I just walk away with a small $200 loss. But that's much better than having like $1,000 drawdown in the account. And if I'm actually able to build up a cushion effectively, then I'm allowed to take larger risks to where I can shoot for big wins on the day and small losses. That's my risk management system. That's how I think it's the single most easiest way to get funded on these funded account programs like Top Step. I think in that regard, it makes perfect sense to use that type of system. And I think if you can be disciplined with that system, again, it's fairly easy to get funded. I mean, you might have to buy a couple accounts. You might have to reset. You know, you're always going to have good and bad variance. But outside of that, I think that's the most effective way to get funded. The first move is usually the wrong one. What are the chances we see a massive rug today? I don't know, man. I mean, I think we could, but I don't think we have to. Again, the market's just not that easy to make money in, you know. It's not just the 1% beat, Jay-Z, is that we came in 0% for inflation. 0%. That's an optimistic sign. You know, 0% is good. All right, so again, the E-mini ripping up, breaking highs. Looks good. Nvidia is still churning here. All right, so again, I'm getting less and less confident of this big pop right now. The reason I'm getting less and less confident is because Nvidia is starting to test the VWAP at 496. We're up a lot, and I just don't think we're going to continue forever up. Maybe we do, but I just don't think we're going to. All right, we're at 496 is back. So Nvidia is starting to break under the volume weighted average price. Again, AMX still ripping up. We took some profit on that earlier. Because again, while I'm funded on multiple accounts, I also have my TOS account that I trade stocks into. You know, that's got like 50K in it. So we trade a little bit of everything. I've been taking some profit in stocks this morning too because I can, and we're up a lot, so we might as well, right? See if we get a Santa rally. Market is fully bullish. Oh yeah, the market's obviously very bullish right now. Very, very bullish. You know, how long will it remain bullish? I don't know. You know, it's up a lot. I think it could be time for a pullback. We'll see. All right, so we're finally getting a dip. Like I said, guys, I'm not buying. You see me stop buying. We're up a little bit too much. Nvidia's starting to come down. We're about to hit the 200 EMA on Nvidia. So again, this is one of the reasons, like, hands off the gas, foot off the gas. I mean, again, at a certain point, okay, the biggest rookie mistake I see people make, right, is that, you know, an experienced, a rookie trader might look at a big gap up and say, oh, well, this is bullish, and want to buy stuff at the opening bell because stuff's gapping up so much. An experienced trader might look at a big 20% gap up and say, oh, well, I think it's extended on the upside. I'm more short biased now, right? Because the market's balanced. And I think that is something that a lot of people miss out on. Greed gets in people's eyes. When stocks push up as much as they are and the SPY's pushing up as much as it is, people still want to stay bullish because, you know, they don't want to miss out. FOMO is a real thing. But I think after a certain point, as the market rises, you'll see me at least. And again, I'm not claiming to be the greatest, most profitable trader ever or anything like that. I don't claim to be anything. I'm not selling a course or a service. I don't claim to be good at all. I just, you know, teach people what works for me. And one of the things that works is understanding extension. Extension's a big thing, right? Understanding when things are up too much and where the edge lies in those specific situations. And I think if you can start to do that, you'll notice after really big green days, usually, like, say we get 3 or 4 really big green days in a row, usually, not always, especially not the last couple weeks, but usually you start to get some pullbacks. You get profit taking. People start to take profit. And so in that regard, you have to look at it, extension, especially at like the opening bell when something gaps up big. You have to look at profit taking potential, extension, and all that good stuff. You can't just be one direction only. You have to you have to be fluid with it. Yeah, right now I am up $1,085. In my equities portfolio, I am up $699 right now, or so. 7. Actually, now it just switched to 702.60s. So again, we are up 700 roughly in equities. Futures are up like 1,100 or so. I don't really watch level 2 that much, Corey. You know, you get a lot of traders that just, you know, what I see people use level 2 a lot is to sell courses. I think that level 2 in and of itself is highly manipulated. You know, like they're not even actually like filled orders. They're just random orders that get thrown up there.
The time and sales in that regard seems to be a lot more useful for me, because at least it's actually filled orders. Anybody can throw some whale-sized order on the level 2 that they know is not about to get filled, and then take it off to try to scare traders out or in. And so in that regard, from what I can gauge from the level 2, it's purely random. And most people selling courses use it and make stuff about it because they want to look smart, because it's super complex and nuanced. And again, I'm not saying there's not people that can genuinely read a level 2 well. I'm not saying there's not, but to me, making trades based around the level 2 seems to be, for me at least, not where my edge lies. But again, no judgment if you're like a level 2 trader. I'm not trying to hate. I just don't see any edge in it myself personally, and everybody's different. Oh yeah, Bookmap's different. Yeah, maybe double bottom. We're hitting the 200 EMA level. If you guys see this yellow line's the 200 EMA. There's a reason I watch the volume weighted price and the 200 EMA. Is because they're usually pretty big milestone levels. With technicals, you're trying to do what you're trying to do what everybody else does, because you're trying to follow the pack, ride with the pack in that regard. If everybody's buying, you want to buy. If everybody's selling, you want to sell. And so in that regard, when you're looking at technicals, you want to watch indicators that a lot of other people watch. There's a lot of moving averages that are just nonsense. The 9, the 12, the 28, the 23, EMA, SMA, all this good stuff, right? But when I look at indicators, I'm trying to find indicators that I know have a consolidated interest of traders. And I think in that regard, the VWAP and the 200 EMA are my favorite, because I know traders are watching the VWAP. I know traders are watching the 200 EMA. It's not arguable. A lot of traders trade off of them. And so when we pull back to them, you got more consolidated volume of traders there, and I think that makes it easier for them to be valid and work, because you got so many traders basing their trades around it that it's self-fulfilling. It works. Yeah, fear none. You seem to be offended by me saying, hey, I don't find any value in it. It's subjective. I can say I like chocolate cake, and you can say, nuh-uh, chocolate cake's gross. Is it really worth an argument, though? It's a subjective, opinionated thing. I literally said I'm not saying there's not people who can use a level 2 effectively. I just find no value in it personally. That shouldn't offend you if you're secure with your own trading stuff, brother. Yeah, I mean, I've got 4 monitors, so you don't know what I trade with, to be honest, Fear. All you see is one chart, brother. Personally, the tape is helpful to see which price levels are sticky. Depends on what you call the tape. A lot of people call time and sales the tape too. And again, it doesn't mean I'm right or wrong, guys. It's just preference based. I'll tell you this, right? The overarching point I'm trying to make, and if the shoe fits, y'all can wear it. But everybody's different. Everybody trades different. Technicals are different. The sign of a rookie trader is thinking that everybody has to trade their way, and if they don't, they're wrong. The sign of an experienced trader is saying, hey, this doesn't work for me. I'm not judging you if it works for you. It just doesn't work for me, right? Those are two different things. Again, when I talk about the level 2, I'm not arguing that there's not people that can actually use it successfully, okay? But for me, I don't see any edge in it myself, and that should be an understandable thing. It's just everybody's different. It's too manipulated for me. There's too many random rogue orders getting thrown up there to end up scaring traders or all that good stuff. I just don't find any value in it myself, and that should be understandable. Yeah, I need 12 trade to minimum. You're probably right, Andrew. I'm lacking over here, brother. I need 12. 13 really. Didn't President Lincoln famously say you need about 20 monitors to trade, and if you don't, you're a rookie? I think he did. I think that was him. Equities portfolio is still pushing up here. You love to see it. Everything's green basically right now on the day, at least. I only have one thing that's red on the day out of like 30 positions, and it's RTX. I'm still green on RTX though, but yeah, it's red on the day. Of course I use Chart Prime. Chart Prime's dope too. Chart Prime is a trading view indicator service you could use in stocks, crypto, Forex, futures. What I've been using it today for specifically though, what I've been using it for today and yesterday. Again, I've mostly been looking at one specific data set, and I'll show you that here, team. I'll show you that here. All right. Again, if you look at Chart Prime, I'm looking at one specific pattern the last few days. And then again, this doesn't mean the one specific pattern is the only pattern. But again, here's Chart Prime, trading view indicator service you can use in stocks, crypto, forex, futures. I'm kind of a broken record about this, but it truly works, right? And I've kind of changed it a little bit. I used to think it had to be engulfing candles. If you get a reversal signal and any type of candlestick indicator to confirm it, usually very high accuracy. You can see an example of that right here. It needs to be within the first like 3 minutes of each other, give or take. Or it needs to be in 3 candles of each other, give or take. When that happens, the odds that it's going to push up or down over the next 20 to 30 minutes are very high. Look, big rip up afterwards. Here's another example, bearish engulfing reversal down, drops for like 30 minutes here. Here's a small one, bullish hammer and reversal up, beautiful bounce. And this is a 5-minute chart. Even if you just look at the reversal signals though today, they can be powerful. Like look, reversal up signal here, nice little bounce, reversal signal here right before the rip, and then we did follow it up nicely. So pretty accurate. Another one that you can look at is the regular Market Oracle Pro. You can also put like chart patterns up. I just put some chart patterns up, as well as the regular Market Oracle Pro. You also have to understand though, ahead of inflation data, a lot of the time the market is sideways and neutral. But like, again, look at this today, guys. So like, look at this today. I'm going to zoom in so you can really see like the following price action of it. Like, look at the buy and sell signals on a 5-minute chart. Look, buy signal here, huge bounce. Sell signal here, nice dip. Strong buy signal here, nice bounce. Sell signal here, nice little dip. We could call that one didn't work though. Strong signal here, worked. Sell signal here, worked. Strong buy signal there, worked. And so they're almost 5 for 5. I think they might have missed one. And again, I challenge you to back test some of these yourself. Again, you can use these on any time frame. I'm not saying like you're going to have to look and find out notices of time in which they work, like segments of time in which they work. I think that's the most effective way to do it. And so you have to kind of use what works on any given period. But again, here's an hourly time frame as an example. So every candlestick represents an hour. Look at the reversal signals too with the candlestick patterns that I talked about here. Look, reversal signal on a long-term basis. Same thing, candlestick patterns right on top of the reversal signal. You can see like how much it bounced up right here. Like, look at this. It ended up ripping up for hours and hours. Reversal down signal worked, dipping for hours and hours. This buy signal worked, ripped up for hours and hours. Sell signal worked, dipped for hours. Strong buy signal worked, bounced for a few hours at least. This one maybe didn't work, but like, again, when you actually test this, it's pretty legit. I can't promise anything in terms of results. Nobody can. And you got to just figure out what you like the most. You can use these on a 1-minute time frame as well. You can see like flag patterns. Again, if I zoom out, you can see like flag patterns. And then one of the other most effective ways is to wait for the flag patterns to break like this, you know. But again, just useful. Sell signal, like figure out stuff that works and then test it out yourself and then use it. For how much it costs, you can get 40% off if you use my link. It's very cheap for what it offers. It's very cheap. And you can use this in stocks, crypto, forex, futures. You know, it just works really well. If you want to check it out, here is the link. Again, they are a sponsor of mine. I can't confirm or guarantee any profit or anything like that, of course. I'm biased, as I always tell you guys, but I think it's useful. If you want to check it out, there's the link. Yeah, I remember when Lincoln said that. Yeah, for sure. But yeah, you see, I say that, prove old boy wrong, and then he just gets mad and leaves. That's very common here, you know. Not the What's up, Tiny? Good morning, peeps. Had a late start today again this morning, but feeling groovy. Had some work come in. Hey, good luck, Tiny. Thank you. Appreciate you being here. Palantir was an AI play, right? So I think Palantir was AI, if I'm not mistaken. Man, the NASDAQ's still just churning up here. I'm trying to see what it is. Like, look at Tesla. Tesla flat on the day. Microsoft's starting to go green. Apple, really green. AMD is what's surging up today. So AMD is looking really good, even relative to like Nvidia, which is not so hot. Nvidia's still up to basically 500. The E-mini, the NASDAQ, rip it up here. Look at like Walmart flying up. Again, Home Depot had great earnings up to 306s right now. Just looks good. Anything else that you guys see moving up that you guys want to talk about, let me know. Hey, later, whale. It's called Chart Prime, Sam. It's called Chart Prime. You can see the link in the description if you scroll up. or right below you. Do you have a favorite setup aside from any price action? Most of the time, like I scalp a lot, but I scalp based off of ranges. And so, like, to be honest, I'm gonna do my best to like draw it out so you guys can see what I mean. But okay, so like let's say we've got this big long range here, like this, right? Let's say we got that big long range here where you can kind of look and it's like a rectangular range. Okay, so like let's say we have that. A lot of the time, like once we tap a specific level, it can turn into a magnet, or really once we start to approach a specific level, like milestone levels. Like in this regard, it can be the high of the day, right? So let's just draw a candle movement like this. Say we break down a little bit, say we come back up. As we start to approach this high of the day level right here, then my stance is going to pivot to more bullish. And so I'll either look for a couple different setups. One of them will be we look for a test of it and then a pullback, and then we bet on basically a retest. And so we kind of buy it right here and then look for a retest and then take some profit. And if it continues to rip, great. But if not, we take profit at that retest there and lock it in at the top of the range, right? A lot of traders get this wrong, I think, because they end up trading like high of the day breakouts and nonsense like that, and they just don't work that well. And I'm still attacking the high of the day test and range, but instead of buying it when other traders are taking profit, I'm waiting for it to test high of the days and then like buying a pullback towards it. And that's one of the ways. The other way can be like the opposite of that, where we have a high of the day. You know, say we got this high of the day here and it continues to test it. And then we pull back a little bit and say we break that high of the day range. A lot of the time I'll buy a pullback here to retest that high of the day and then look for like a bounce back up. If that makes sense, I'll do that. And then a lot of the time I'm using like the volume weighted average price like this. Like Home Depot is a good example where, you know, we just have this range, like a very obvious trend that's forming. On a longer term perspective, I'll do trend trading, but I'm just trying to ride with the momentum, take advantage of tests of milestone levels and use those milestone levels as kind of like magnets that I can bet on. If that makes sense. You can use Chart Prime on any time frame saga. You can use it on, you know, a daily chart. You know, reversal signals on a daily chart are obviously not going to be day trading signals. You know what I mean? You can use them on a lot of different stuff. Again, I would check them out if you want. Again, they're a sponsor, of course, but I think they're cool. Trend trading. An example of that, it's not really today, but here again, I guess I can use Home Depot as another example of this. I'd probably rather put it in a 5-minute chart. So an example of trend trading would be like this right here. This is a 5-minute chart. Sorry, my lines aren't the best. I actually have a way I can draw lines. Looking at trends like this and attacking that trend when they're in there on a 5-minute chart. And again, Chart Prime will show you some of this stuff too. But like using a 5-minute, a 15-minute or whatever and identifying trends like this that show up. Again, let me show you. Can be the best way to trade long term. You know, and so one of the things, like if you're trying to build up a cushion on the day, it might not be the best. I'll usually scalp when I build up cushions. But once I have that cushion, I can let the cushion work and attack trends, longer term trends like this on the day. And that seems to be fairly profitable. How often does the SPY have a 2% gain or loss on a day? I haven't seen it for myself yet. Oh, I mean, it's pretty common. You know, we have big volatile days, big upward days, big downward days. It's pretty common. That's standard. Um, Obviously, with big economic reports like today, it's a little bit more common, but it's still fairly common. Oh, all right, guys. I'm probably just gonna close it down. Again, tomorrow we have PPI, the other side of this inflationary token. We are at 118,000 and a half subscribers. We need 1.6 thousand subs to break 120K. We're pushing. You know, see if we hit it or not. Again, y'all hit that like button, hit the subscribe button. Again, we cover all this stuff pretty regularly, all the major economic reports, all the big earnings reports. We stream them all live for free. Don't charge a penny. Again, if you appreciate that, hit the subscribe button, hit the notification bell. Pretty good day in futures. Again, we're up about 1,100. Haven't traded anymore in this one on the day. Good in stocks and equities too. We're up about 700 plus. So not a bad day. Again, if you want to check out Top Step, this is a funded account program where they give you a demo, test your skill. If you can pass the test, they fund you. If you don't pass the test, you're probably going to lose less than you would putting up thousands yourself, in all honesty, right? So it's the best of both worlds. Great way to learn how to trade under pressure with less risk. But if you're good enough to pass it, you still get a 90% split. They're the most legit futures one in the world, in my opinion. They pay out millions every year, fund thousands a year, pay out millions in actual withdrawals, and a great way to learn day trading with a smaller starting point. You know, less risk is what I mean by that. But yeah, if you want to check it out, again, hit the subscribe button, hit the notification bell. I appreciate the love. If you want to check it out, here's the link on that in the description. Check out the link in the description, or check out this link. And I appreciate the love, guys. Again, they are a sponsor. I'm certainly biased in their favor. Appreciate the love. Great day today. We had a lot of people here at 8:30, and a good day for my trading overall. So I'll see you guys later. Y'all be safe.